Hello, ladies and gentlemen. Welcome to task 2 of the pro section, which is really it's just an extension of part B, what you've been doing in task 1. Task 1, you've been getting familiar. I just wanted you to get familiar with merging, playing around with volume profile, all the settings that I told you about. Really, you needed that bit of time. I don't really want to put a time limit on it. If it's taking you a few days, fine. If it's taking you a few weeks, who cares? It really doesn't matter. It's taking you as long as it needs to take you. That's the point. There's no, pressure or anything to finish with task 1, but this is really just an extension now. I want to move you on and actually start to get you marking some of the levels that you've been doing. But I just want to make a quick note before you do that around. So there's a bit where you may have noticed at the moment it's called Discord. So I've got a Discord room which I explain in the Discord section. The reason I've left the section separate and I've put similar here is because, look, you might be watching this in 2, 3, 5, 10 years time. I don't know. These concepts have been working for a lifetime. At the end of the day, it's just what? Demand and supply, buyers and sellers, right? Since human beings came into existence, this has been working. So this is going to work well after my lifetime. So all of this stuff is still valid, but who knows? There might not be a Discord in a year's time, 2 years' time, 5 years' time, 10. I don't know. There's going to be something. It could be a different platform. It could be something completely different. That's why I've kept it different. But as of the time of me recording this, is a Discord. So whatever it is, whatever medium we've got to bring everyone together, essentially, whatever we're using, obviously at the moment it's Discord. The purpose of that is, what it is obviously I want to replicate what is happening in a professional environment as closely as possible. So what I want the Discord or whatever it is we're using to really become is a virtual institutional trading floor and a space where I want you to feel as if you're in a professional environment, okay? None of this, no offense to anyone using it, technical analysis, squiggly lines, all that stuff, no. This is, and I said to you, I've been quite open and honest. In 16 years, I've never seen that stuff used before. So, it would be unrealistic for me to have an environment where you're doing all that retail stuff, right? I'm trying to create a professional environment. I can only go by what my years of experience, and I think that's a decent amount of experience for me to comfortably tell you that, look, in a professional environment, all that stuff isn't there. Let's create a professional environment where we're looking at professional tools, right? And professional approaches. It makes sense. So I want to create a virtual institutional trading floor. There's loads of people in there. Let's do it together. Let's treat it as such, a professional environment, exactly how it would be on a professional trading floor. You don't need to be there all day long. It's not that. Obviously you might have work, you've got family, you've got whatever. But when you're there, you're there. When you're not, you're not. But when you are there, I want it to be a professional trading environment. I want you to share ideas. So what do I mean by that? I want you to, let's share ideas together. There's no right or wrong. I want you to put your task 1, task 2, however many tasks the pro course ends up being, and then even after, where you get into full sort of simulator mode, or if you even develop further than that, and hopefully you do, whatever, much further down the line, whatever it is you're doing, share openly. There's no right or wrong. It doesn't matter. If your analysis ends up being, completely wrong, it doesn't, because you don't know what's going to happen, right? You don't have a crystal ball. I don't have a crystal ball. It's more about, how rigorous was your analysis and how logical and how analytically rigorous was the process that you went through. What the market decides to do to a large extent is obviously, in fact, to a complete extent, it's out of your control. So you don't know. So, which kind of leads me on to my next point. Whenever I was in a professional environment, professional traders, they never hid anything. And I'll tell you that quite openly. Traders would be quite open with their prep, and I did find this Investment banking, I'll be honest with you, was a little bit of a different environment. In particular, like in some of the market making areas, and that weren't pure outright speculative risk taking. But as soon as I got into environments where you were taking outright risk, you worked as a team. There was this camaraderie, as I've put here, and yeah, you worked in a team environment. It was really important to share ideas, help each other, because at the end of the day, you're all going to benefit. So I've put the link there anyway, as in there's a video after this. At the moment, it's Discord, obviously. I don't know what it's going to be when you actually end up doing the section, but there'll be something there. So at the moment, it's Discord. So jump on and just remember this, that be open, don't be worried, don't be scared about, oh, I don't know if my idea will work out or not. Doesn't matter. You don't get points for P&L. You get points at the end of the year, end of the month. Obviously, it is, ideal that you've made risk-adjusted returns. Of course it is. But come on a day-to-day basis, you're not going to learn if you're always worried about, should I post this? Should I not? What if I lose? What if it doesn't matter. Honestly, we can worry about, like I said, your combined results over a month, 2, 3 month, 6 month period, and reflect on that and figure out where things might be going right or wrong. But day to day, guys, just go all out, and people will help you. Obviously, if I see something, I'll be able to help you if you're more open. If you're not open, then I'm not going to know, am I, what you're doing right or wrong? I'm really not going to have a clue, and nor is anyone else. So, and I say this in the video, I can't obviously guarantee that I'll be there every day, but I'll try to be as active as possible. So just remember, basically, these sort of ideals when you're in the room. So that's enough on that. So what is task 2 about? Well, task 2 really is, I want you to continue to work on composites, obviously where you've got profiles, and obviously in an ideal scenario, they're going to be balanced like this. You combine them, don't you? But the point is, when you come up with this one large composite, now what I want you to do in this section is we're really going to start marking these so that, when the market comes back, we can decide, what do we do in this situation? What do we do in this situation? What do we do in this situation? What's our expectations, those kind of things. So really I need to show you how I mark these levels on, obviously, the platform that I use, Sierra Chart. And then I mentioned, I don't really split them out, but what I'm going to do in this section is, I realized I don't want to, you're going to see when I come on to institutional expectations on the next slide, is that I don't really want to give you one example for this expectation. No, what I'm going to do is I'm going to go through a market, either the E-mini or crude oil, and I'm literally going to go over, as of today, the last, say, 3-4 months, and we're going to have a look at how some of these institutional expectations play out. So do you know what? Rather than talk about it too much here, I'm going to go on to the next slide now. And then I'm really going to show you what I want you to be looking out for in task 2, but also I want to start to introduce some expectations, which is really going to help you develop edge and look for building some rounded ideas about trading strategy. And I'm going to show you what institutions are doing, pretty much, because obviously I've had the exposure, so I've got a very good idea of their expectations around different market conditions. When the market's balanced, rotational, or imbalanced, what are the expectations? What do institutions program their algos to look for? Not only algos, but obviously their individual traders, or people that are even trading like investors on bigger long-term value. What are their expectations generally? So we're going to talk about that on the next slide. Let's go to the next slide and it'll become a lot clearer what I mean. Okay, so what I've done for you, okay, and I've actually never done this before because I've always taken this for granted. And look, I don't want you to think, just because I've written Envy's institutional value expectations framework, what it is this is actually, all I want you to think of is this being a value expectations framework for institutions? I'll put my name there only because I've organized this. That's the only reason. Because the reality is, I told you I'm going to teach you everything that you would get taught in a professional firm. And they'll tell you some of these things, but it's not very well organized, you know? So this is where my years of experience are really adding value to you, in my opinion. From my own experience, I wasn't necessarily taught this in a very structured way, and I'm really trying to reduce, as I said, it took me a long time to really recognize a lot of these things through observation, and you're still going to have to put in the time. You can't get past that. But the point is, rather than you fumbling around like I did for a long time, I want you to start with the expectations and observe them, okay? You can amend them as you want, and I've said this many times, I don't want you taking my word for this. Just observe according to what I have experienced. And by the way, if it helps, and it should give you a lot more confidence, if I say that, look, you already know that I've worked, a big part of my life in institutions, and I can tell you, and I've obviously been involved in working close with algorithmic building and also traders that trade value, essentially. And I'm talking large amounts of money trading value in the way that I've showed you. And I can tell you this is exactly what they're looking at. I've never seen it written out like this, but I know that this is what they're doing when they identify conditions. So I don't want you to think that, oh, Envy's made up some rules for us and it's Envy's indicator. And guys, complete garbage. It isn't. All this is my logical observations over many years of what I've seen institutional algorithms look for, which you saw. I kind of showed you this stuff anyway in the depth of market. So you don't need to take my word for it. You've been on the depth of market and you can observe it. You can see when the market's balanced, it tends to stay balanced, right? It's logical. This isn't an indicator that I've programmed and developed and it's some magical formula. No. And I don't mean this in a patronizing way. I'm trying to help you when I say you've got to get rid of that thinking. It's all garbage. It's not going to get you anywhere. What it is these are just very logical expectations, not only in financial markets, but in every traded good and service in the world. I've already said this before. So for example, if the market is happy selling iPhones at £1,100, it's going to stay at £1,100, isn't it? It's not going to disappear to £2,000 or drop down to £600. No, when the market is balanced, it stays balanced. So that's all I'm saying is, I haven't invented any of this stuff out of thin air or come up with some framework that I think, oh, let me go and test this. No, not at all. The market has told me this. My exposure to some of the world's best traders, I've seen it with my own eyes that this is what they're doing. Obviously, I've been involved in development of algorithms that trade around volume profile. This is what they're all doing. So guys, this is what professionals are doing. It may not necessarily be written out. Obviously, people don't, I'll be honest with you, professionals don't necessarily want this on, written out there in public. So before I've said in the etiquette section, and I've said, look, I don't care really if anything's out there and whatever. I'd prefer you didn't, out of courtesy. This, however, I would really appreciate, not because it's some magical indicator or tool or whatever. Look, at the end of the day, I'm an institutional guy. I'm a professional. I've extracted a lot of this, yes, through observation, but also through observing what professional people are doing. And I know people wouldn't appreciate if this was plastered everywhere. All right, so I would politely request that by all means, show your friends, whatever, who you think are professionally inclined. By all means, do all of that stuff. I've got no problem with you discussing this with people. But obviously, like I said, in public forums and things like that, I just think it's professional courtesy that you don't go and, print it out, take copies of this, do whatever you want with it. Keep it in front of your desk, plaster it all over your walls, I've got no problem with it. But obviously in the public arena, I think there's a reason why professional firms or institutional guys or algorithmic traders don't necessarily post all this stuff all over the internet, because it's something that out of professional courtesy, and it's just one of those things that isn't necessarily put out there. And don't get me wrong, it isn't like some black box secret that is the road to riches. It's absolutely not that. It's just more about professional courtesy, and I've seen that in professional environments, is that people like to exercise a lot of that if there's an understanding or whatever. I probably haven't explained it very well, but hopefully you understand that it's not that this is some secret that's going to make you millions. It's just obviously that obviously guys that are doing this sort of stuff prefer that it was kept within professional circles, is what I mean. That's all I mean, So I consider you doing this course now, you've got to this stage, a professional. Because you're not using all the retail stuff. So that's why I got no problem sharing this stuff with you. So I guess I should have said that from the start, rather, because I couldn't think of the exact wording for it. But it's, professional people like to keep this between professional people. That's all. Don't want to put this out there with guys that are using, moving averages, trend lines, all that type of stuff. No, you don't. That's not a professional way of running the business. Now that you're doing things professionally, I'm happy to obviously put this down for you in black and white. So that's enough of that. I've gone on quite a bit about that. It's just I just want to make sure there's no misunderstanding, basically. So what is this value expectations framework that I've put together? So if you think about it, right, I mentioned to you in task 1 how crucial it is to identify conditions. Why is that? Because those conditions are going to determine, as I said to you, how we trade. But would you agree we want to have some expectations? We want a framework, but we also want to have some expectations around that. So look, don't take this as gospel. This is just obviously, like I said, what I saw other professional people doing. This is what I do, and this is what I've observed in the marketplace. But I want you to kind of keep this as a hypothesis, not the thesis that you do for the day, although this will help you form a thesis. I mean a separate hypothesis. Do a hypothesis for yourself and print this off. I'm going to put this in the download section for you. And again, I appreciate if you didn't plaster this everywhere, and I know you won't, because like I said, we're all professionals now. So obviously be discreet with it, but I'm going to put this in the download section, and I want you to test this hypothesis. I want you to go and observe this in the marketplace, okay? So let's go through them very briefly, and then I'm going to go through the last 3-4 months of, I haven't decided yet, maybe the S&P or the crude. Like I said, I don't want to cherry pick. I'm just going to do it off the cuff like that, and we'll see how many of these we can spot, etc. But let's have a look at them in theory, just very briefly. And I'm going to use this little space to go through all of them, because obviously I haven't got space for it. So they'll be very logical to you when you look at them. Balance, rotation, condition. What is the expectation in a balanced environment, right? Well, you already know that when we're in a balanced environment, what is the market doing? It's just doing nothing, right? It's just going up and down. It's gyrating like this. Not only this market, we saw in Cadbury's cream eggs. Obviously, the financial market has much more of a tendency to do this intraday throughout the day, because we talked about this. Supply is phenomenal, and obviously the price determination process is taking place second by second. So obviously the market does like to test the edges of balance just to see, are they going to hold? Are they going to hold? Are we happy? Are we happy here? Are we happy? It's all it's doing when it's balancing, right? So can you see what's the expectation when we're in a balanced environment? Is to test the other side, right? So it's not a great, obviously there will be, because do you remember the value area is really 70%? So there is going to be some sort of price movement taking place outside, isn't there? Like that, almost. That's more realistic. You know, you're going to get a 70% in here. So if the expectation is to test the other side of balance, right? Can you see, if we take a trade here, what's our expectation? We should have targets here, right? The other side. So value area to value area. This is going to help you develop trading strategy, okay? Whenever I'm looking at the market, I got my eye. If I'm taking a rotational trade, I'll be looking ultimately to test the other side of balance, okay? Now I've put here mindful of the POC or VWAP, which is in a VWAP framework. VWAP is obviously the mean, but it's the central area of value. It's that central area of value. What's the POC? It's exactly the same thing, point of control. It's where the most volume took place. Okay, so in the middle. So you'll see this when we get on the charts, and you'll see the point of control marked. So I'm going to tell you what I do. And obviously later on when I introduce the VWAP and we actually get you on the charts, this will become much clearer. For now, just start to think about this. Keep it in front of you. I'm going to put it on the side, like I said. Maybe have a printout or something. So you can start developing targets, expectations, okay? I'll be honest with you, even though they may not ultimately be hit, or I may change my mind, because obviously the market's giving me feedback as the trade goes on. Guys, I always have an expectation. I'm a business. You know, if you run a business or if you work for someone in a business, they have expectations about what? The price they can achieve. When you put something on auction, you got in your mind, I want to achieve this price. It's absolutely crucial. You know, you can't go into a trade thinking, I don't know where it's going to go. You can always extend the target. Don't get me wrong. I've seen some incredible traders go with it. If momentum comes in, they're going to extend their targets. See, what I've noticed is in retail circles, people get obsessed with fixed targets. Don't ever have a fixed target. That's not what I'm saying. I'm saying have an expectation and then adjust accordingly. But at least start with a base expectation. And typically in imbalanced environments, that's when you'll see the expectations can change, because think about it logically. When the market's imbalanced, it's got momentum behind it, hasn't it? It's got what? Aggressive market orders. And new people coming, come on, you know the markets are just people. They get emotional. They get, I don't want to miss out on the move. You get a surge of people coming in. And if you read the order flow and it's getting very strong, I'll do this all the time. I might add to my position and actually I'll say, do you know what? Forget my initial expectation. I'll change it. But rotational environments, typically, it's quite clear what your expectation is going to be, which is the other side of balance here. But what I'll do is I'll always take off some of my trade at the volume point of control, or the point of control if it's obviously a market profile, or the VPOC if it's on the volume point of control, but it's the same thing. And if it's the VWAP, then I'll always have the VWAP as a sort of scale target, because a lot of times what will happen is, so for example, we'll be fading it here, and you'll see it down here where I talk about if the POC holds, value builds, the market will get here, and sometimes it can just snap back in your face. You know, you don't want to get caught. So I'm always cautious, and I will always take some profits then. It kind of makes sense, right? Because yes, the market likes to overextend itself and test the other side of value, but the reality is, what is the fair price, the actual fair price? It's where, in theory, where the point of control and the mean is. Because why is that? Because in theory, it's where the most, in particular, where the point of control is. What is the point of control? It's the mode. It's where the most amount of volume took place. It's where there was price agreement at its maximum. So obviously, the market and algorithms, I can assure you, I don't think I've come across an algorithm in an institutional circle that isn't aware of where VWAP or the point of control is. And actually, this is a really important point, right? The reason why this value expectations framework that I've built out for you is so important is because, and I don't want you to worry about this right now, but it's important that you familiarize yourself with this, because you'll notice later, this applies to all value. That's why I've written value here. And what you've got to understand is profile, as you know, helps you determine value. I've kind of hinted static value because it's all historic. You'll see VWAP is exactly the same. It's all it is right? VWAP is profile, but it's developing profile. Because think about it, volume profile builds throughout the day. That is VWAP, essentially. VWAP allows us to visualize a developing profile in that intra period that we're in right now in a much more visually appealing and easier to read format. It'll become obvious when I introduce the VWAP. Whereas historically, VWAP would just be a straight line, so we might as well just use the volume profile. This will become a lot clearer later. Some of you, this may just make sense straight away. If it doesn't, don't worry about it. It's not going to be, you're not going to make it. That's ridiculous, you know. There's certain things I got quickly. There's certain things, believe me, it took me ages to get. And everyone else in my sort of training group got stuff much quicker than me. But look, I'm still here after 16 years and they're not. So it doesn't matter, okay? What matters is ultimately at the end, are you able to develop edge in 9 months, whatever it is, a year's time, okay? So don't worry if you don't get it straight away. And I'm going to explain the VWAP stuff to you anyway. It's just that it is important that you recognize at this stage that this value expectations framework, it applies to all measures of value, okay? Algorithms that are using VWAP, basically every single one. Institutions that are using VWAP, every single institution. They're applying these conditions to it, not because someone just decided to invent these conditions. Guys, these are logical conditions. I've already explained them to you many times, although I might not have put them as 1, 2, 3, 4, 5, 6, 7 like this. When we did auction market theory, this was all happening, okay? And this happens in all traded goods and services. So just remember, A, that it applies to the VWAP profile, every single lens, be it a long-term value guy, short-term, and I'll show you this, okay? For now, just worry about profile, but it's important I mention that. And 2, just remember, this isn't something I've made up. This is logical, and it's happening because it's part of the auction process. So, you know, as I said, for example, we saw on that thing I showed you with Amazon, with the price of Cadbury's cream egg, where it was just going up and down. They were just testing the edges of value to see, is it going to hold? You know, businesses are doing this all the time. The market's no different. It's just testing, okay? So that's why the expectation's there, because the market's telling us that it's doing it. Okay, I've written my name there, like I said, and I know I'm repeating a point I said before, but it's important because I don't want people to see these as hard and fast rules that envies make. No, it's not, you know. And in fact, you can even imagine I didn't put my name there. It's basically what the market is doing in every traded good and service in the world, including financial markets. And you'll realize this when you actually sit down and think about it. So that one's obvious. Expectation is to test the other side of balance. Another thing, what do we observe and see that the market does in rotational environments? Well, it's going to stay, isn't it? If the market's happy, why am I going to have any expectation, if we're in this rotational environment like this, that we're going to do anything else? Why? I haven't got a crystal ball. Do you see what I mean? And this comes on to a really important point. I've noticed this. People get obsessed with forecasting. Guys, you've got to forget about forecasting. Do what the market's actually telling you. The market up there, as you can see here, is clearly telling you we're happy, we're rotational. If clues come in that we may go in balance, fine, change your expectation. But when the market's actually telling you what it is, why? Why do you want to try and be clever and forecast things that aren't happening, okay? And I noticed this happen a lot. And again, look, I'm sorry, I know I keep coming back to indicators, but This is the danger with indicators. They set these they cause you to forecast too much and get your crystal ball out and think, oh, this could happen, that could. No, forget it. Let the market tell you what's happening. Market feedback is what? It's just gyrating within value. So the expectation is what? That we're going to stay rotational. Okay, so hopefully that's clear. We'll keep coming back to these. Look, don't worry, we will keep coming back to these. I don't necessarily look at this stuff, okay? And like I said, I've never actually written this down. I just took it for granted. And for me, it's just normal. But what it is I want you to know what not only my expectation is, but what every institutional investor in the street who measures value is looking at and what their expectation is. Because expectation can't be any different, right? At the end of the day, if iPhones are selling at, like I said, £1,000 on eBay or whatever the price is, let's say it's £1,000, for a long period of time, why, oh why, would you then go and decide they're going to be 2,000 tomorrow? It's ridiculous. Do you see what I mean? The market's telling you. And at the end of the day, investors, they'd be silly to do anything different to what the market's trying to tell you it's doing. So that's my point. These expectations are based on incredibly basic logic, okay? That's all it is. Keep things simple. You've heard this before. Keep things simple, right? This is what you're doing. Try and just keep it basic, have basic expectations, and then, yeah, there will be times, obviously, where you need to adjust, and that you'll develop. You won't be able to develop that overnight. That will come over time, but keep these in mind. Start off these as a base, and then, like I said, observe them and see for yourself and adjust accordingly as you develop through observation. I talked about this, a theory and observation phase. As your observation goes, you'll see little nuances. You'll see, oh, the market's giving me a clue that actually balance is ending. And I'm going to talk about this, shifts. And we can start to develop edge because you'll be able to see this before maybe an algorithm sees it or another institutional investor sees it. Okay, but we need a base to start from, and this is a great basis that I know for a fact all institutional investors are looking at. So number 3 is imbalance, right? So we've talked about what? Conditions. Can you see why I said in part A, identifying conditions is crucial? Because if you've identified an imbalance condition, your expectations is different, right? So let's get rid of, let's get rid of it all actually, just clean it up. So imbalance, right? You've identified, say this is a composite, very badly drawn composite. The market's doing what? It's doing this. And then what? The market becomes imbalanced, right? So it actually does what? Expectation is to stay rotational and balanced unless otherwise. So something changes, right? We start to do what? Build some value. Do you see? We're no longer gyrating around value. We're actually starting to build some value above. So the market is doing what? It's going imbalanced. Expectation is what? To go to previous balance. And I'm going to write over this, I apologize, but and I'm going to show you this when we do this exercise now. That could be a previous balance area. Okay, and I showed you this loads of times, didn't I? Do you remember when I said traded goods and services, milk or whatever it was? Do you remember I said there could be a collapse because of, I can't remember, there was something about cows or something like that. And then I said when that gets fixed and obviously the health of cows, I can't remember exactly, I believe it was, goes back to normal. Where's the market going to go back to? Previous balance, right? So what do you think the market's going to do here? Go to previous balance in the past where the market's been happy to trade. Do you see what I mean, guys? It's just logical expectations. It's not some made up expectations that you can go and back test. And no. This is happening every day around you, okay? More than you realize this is happening, okay? This is happening in the price of just the most random things you can imagine. I've said it before, Diet Coke, salt, pepper. I'm just looking at things around me, keyboard, mouse, paper, jacket, phones, everything is doing what? if it shifts from value, is typically going to go to somewhere where it's traded before. Obviously, there's going to be times where it can't find previous value, and in which case it has to obviously go through a price determination process where it will just it will basically keep going imbalanced until what? Market orders come in the other way. And that's where I said, look, these expectations can change. Obviously, you can change when that happens, but that's more advanced. That's going to come when you keep observing the market. For now, let's just keep it basic. If we go imbalanced and there is an area where the market has traded before, obviously it's going to go there, because where else can it go, right? At the end of the day, if it's traded, we talked about milk. If it collapsed to 50 cents, 60 cents, and it's traded at $1.50 historically, obviously if it goes back to normal, it's going to go back to $1.50, right? It's ludicrous to have an expectation elsewhere. Yes, I agree, something different could happen, and that's your job as a trader to adjust, but you need an expectation, don't you? To build a plan, to build a hypothesis, to build a business. When you go into business, do you just go and blindly sell things and buy things? No, you have an expectation with a price you're likely to achieve. Doesn't always happen, but at least that's your base scenario, your hypothesis. Okay, so this is, and we're going to come back to this building hypothesis, but this is why we're doing this, so we can start to develop a plan for the day. I hinted at this before. Let's say we've got this composite here, we've got a composite there, and we see the market developing, and you'll see this on the VWAP framework, developing value here. I'm going to start thinking, you know what? I could have an imbalanced trade opportunity here. Where am I targeting? Up here. Obviously, order flow can come in here, and I might change my mind. I might scale out. I might decide, actually, you know what? The buyers have run out of steam, market orders, something's changed. It could be, I don't really look at fundamentals, but obviously I'll be aware of them, right? If there's a big news release and something's happened and the market's clearly telling me it's not happy, why would I hold it till there? But it's my base scenario, right? When I started, the expectation was there when I started the hypothesis. So hopefully you don't think I'm just saying all of this for the sake of it, and I hope this is really making sense to you. If it isn't, don't worry about it. We can go over it and 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 over it. That's the whole point. That's how you're going to learn. You're not going to get it the first time, but I'm trying to give you some guidelines that you can develop yourself, right? So we've covered that off. Now let's look at shifts. Okay, so before we talked about actual conditions and remaining in those conditions, and within rotational conditions, what should our expectation be? With imbalanced condition, do you remember I said to you, market's only balancing and imbalancing. It's not really doing anything else. So in those environments, what is it doing? But obviously there's going to be times where there's a gray area, right? Where it's shifting. Of course it's going to be shifting. It doesn't just suddenly flip from balance to imbalance. There's obviously a transitional phase, isn't there? That's where you can build incredible edge, because you can identify that, right? So how do we do that? Well, we need an expectation again. So let's look at shifts. So one is balance to imbalance, right? How's that going to happen? Well, I mentioned it above. We're in this balance area. If the value area is broken, and what do I mean by broken? We build some transaction. So what happens here? You start to build some volume. I don't really want to get into that right now, because obviously that's a bit more advanced. But if you've been watching the depth of market, can you see why I got you on the depth of market? It's incredible how powerful it is, the time you spent on the depth of market. Because imagine I'd never got you on that and I said, yeah, guys, we get some value here and we just start building volume here. You're going to think, what is he talking about? You've been in the depth of market. If I tell you market orders start coming in here and we get value here, you're going to be like, yeah, do you know what? I've seen that. I've seen that 1,000 times over the last 3 months. It might have been boring, but I saw that. I know what Envy's talking about. I can look for that now. So do you see, you can see some value will start building here on your volume profile or market profile, whatever it is you want to use. And I do combine them. But at this moment, you can imagine, I don't want to because it's going to confuse you if I start showing you combinations and all of that. Let's just stick to market profile for now. But point is, market orders are obviously building, and there is profile building here. But what is the point? Value area is broken. What's my expectation when the value area breaks? Is it for us to come back into balance? No, of course it's not. It's for us to go imbalanced, okay? So remember that one. Do you know what? You can imagine they're so logical. After a bit of time, you won't even need to remember these. They're not hard and fast rules. They're just what the market is basically doing. Like I said, in everything around us. Don't just think of financial markets. All markets are doing this. And if you go and observe this in the real world, even at your local supermarket, newsagent, bike shop, here, there, each and everywhere, this is what's happening, right? When prices are in balance and they shift and you build heavy transactions agreement above, it always starts to then creep up in terms of going balanced. It always happens. And I'm not talking about if we just pop out and come back in, because that's just balance, isn't it? We talked about it here. Do you see, we just popped out and came back in. I'm not saying that. When I say broken here, I mean there's agreement with buyers and sellers that this could potentially be the new fair price. And how do we know that? Obviously, we see some build, all right? We see some two-way action, some price determination, a decent auction taking place here. Then we can say the value area is broken. And I talked about acceptance and rhythm. This is really acceptance, and I will talk about this when we finish this section, so don't worry. I'm going to talk about how we can. There's no hard and fast rules. I've said this before. If there was, we'd be sitting on a beach sipping cocktails, and we just put that into a computer program, and it wouldn't work. You know why? Because everyone would do it, and there wouldn't be a market basically for this, because algorithms would identify this before you, and they'd get in and they'd front run you. You'd never make money if it was that obvious. And you know what? People don't realize this, and I don't want to go on a tangent, but in retail, doing all these things where people say, follow me, do what I'm doing, they don't realize. If it was that obvious, I can assure you, there's people out there with millions, billions, building algorithms. They put that in the system, and that opportunity get wiped out like that, right? I showed you how competitive it is. That's why I'm saying the only way you're ever going to build edge is if you can find ways to identify this happening, not before every single person, but obviously before some major players come in and other algorithms come in. And I'll show you it's very possible. It just requires some observation and skill that you will build over time. So I'm going to get you started with that when I say with the acceptance and rhythm. But essentially, we will identify when the value area has broken. Obviously, the expectation is then for us to go in balance. So that's the point. Now, there is a slight variation on this, okay? So what I'm going to do is, actually, I'm not going to delete this. I'm going to show you. And I'm going to be honest with you. I love this because I see this happen a lot. So it's very similar scenario, right? Where you've got your balance happening. Do you remember? We're going balance to imbalance. So we're flipping, aren't we? Balance to imbalance. Is if the point of control holds. So do you remember I said, I know it's a bit, look, end of the day, markets are not going to make your life easy. You will see markets test, but they will come back to this area because at the end of the day, that in theory is where the most price acceptance was, because the most transactions took place there. It's just that obviously the market likes to gyrate. And I said this before, in Cadbury's Cream Egg, it's the same thing. It's not only financial markets. They like to test the edges, don't they? To see, can we actually hold? But what will actually happen, and I see this happen a lot, is the market will come in and, I said to you, I take off 50% at the point of control here, mindful of point of control VWAP. When we come back here, what sometimes happens, and it does happen quite frequently, is we'll start to build some value off here, okay? And it's a big clue that we're starting to develop some intention in this area, some pressure, in terms of market orders building. And sometimes you can see this in the cumulative delta or whatever. Obviously, we'll come on to this later, but in the order flow, it's not, don't get me wrong, order flow is not a magical tool, and only if order flow tells me. Obviously, there's nuances you'll pick up over time. But essentially, you'll see value building above the point of control, and the expectation is potentially to go in balance. And I've put here expectation 1 to fail. What's expectation 1? For us to test the other side of balance. Do you see, rather than this happening, that will fail, will hold. That's why I take my 50% when I'm doing what? Testing the up. I'm in a rotational environment. I'm expecting us to do what? Test the other side. I'll have scaled out of this. If I see us building here, can you see how dynamic the markets are and why you can never have this? You're in dreamland if you think it's like, let me just set one stop loss, one take profit. No, because can you see the market's so dynamic? It can start giving you clues like this, and I'll be like, do you know what? It's obvious to me the market isn't going down here. I've taken 50%. I'm not going to let the position take me out. Let me just exit the whole lot when I see this building, or have a thesis that we're going to go imbalanced, and expectation 1 is going to fail. That's why I say have this stuff in front of you. For me, I don't look at this, obviously, because it's in my head, and it's just so normal for me in the moment to react. That's taken years to obviously develop. But I put this list together because I thought, you know what? Obviously, I'm teaching, and it's nice to have it, but also I thought it'd be nice for you guys to print it out and have it in front of you. So that's essentially what's happening there. And you know what? I just realized here that I've put balance to imbalance, but I haven't put imbalance to balance. So look, don't worry. It's just the opposite of what you see happening here. So let me just get rid of this. Okay. It's literally just the opposite. It's not any different. When you go from balance to imbalance or imbalance to balance, that shift. Because what you've got here is you've got a rotation environment, you go up, you build value, and then you go imbalanced. Actually, when you go imbalance to balance, it's no different. Your market might be imbalanced like this, and then you come into a rotation environment and you start to build value here. Guys, your imbalance is finished. At the end of the day, that's it, it's over. So here it's the value area is broken outside of the rotation environment, either there, or obviously it can happen here and we go imbalance down. All that's happening if you go the other way, if you think about it, from imbalance to balance, is the value area is still broken, but it's broken from outside coming in, right? You're outside of rotation, you're coming into rotation. Here, you're in rotation and you go out of rotation. Obvious, right? It's just vice versa. So that's why I didn't put it there. I just thought I'd clarify that for you. Let's go on to point 6. So this is very similar to, in fact, it's just a repeat of point 4, where I've put here balance, rotation to imbalance. If the value area is broken, the expectation is to go in balance. So actually, it's exactly the same, okay? So I've just repeated the same point, really. And the reason I did that, I know why I did it, is because what it is, I just wanted to clarify that it is above and below, okay? So basically, we're in a rotation environment, okay? So it can be below, okay? So we build value below, and then we go imbalanced, okay? But it can be above or below. So what it is 4 and 6, you can almost just merge them together if you want. But I remember now, and it's not that I made a mistake and printed them twice. Actually, it was very intentional that I put this on here, because I recognized that I just wanted people to realize that all of these things obviously hold on both sides of the value area. That's all it is. So it's above and below. It's there, below, and then down, and then to some of you this may seem obvious, but I just want to make sure that, like I always say, I want to make sure 100% of people get this, not just 95, 90 or whatever. So I don't want anyone to think, oh, Envy showed us an example just above and therefore it doesn't apply below. It's exactly the same thing, okay? It's above and below value. And then this is a very, 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 very important thing, okay? And it comes back to this expectation here, in particular in an imbalanced environment where, let's say that you've got, I'm just trying to think of the best way to draw this. I am going to have to cover some of this stuff, I apologize. But let's say you come in, you've got your composite here, we're in a balanced environment, your RT8 session opens here. Let's say you start to build some value, right? So either here, value area is broken, expectation is to go unbalanced, or we build above basically and below the value area, right? It's the same thing. Is expectation is what? To go imbalanced, right? And do you remember, when you're in balance, where's the expectation? It's to go to the previous balance. My point is this. I've seen this time and time again, a million times, okay? Do not take my word for it. I want you to observe this yourself. Whatever you do, until you've observed this 100,000, maybe I'm exaggerating, but 100 times or whatever, only then can you actually sort of start to use this in terms of your trading when you've observed it for yourself, basically. Not just because I told you this, but from my experience, once major targets are achieved, obviously major targets are going to happen in an imbalanced environment, right? Because the market's going to move. Once you hit this area where previous fair value is, what will happen is, in fact, let me give myself a little bit more space. And you'll see why I want to give myself space. Okay, so we go up. God, sorry. It's not thick enough, is it? We go up, we go up, we go up, we go up, and then we come into our ultimate target, right? Previous balance. And then we consolidate in this area. Guys, honestly, I won't get involved in the market at this stage, very rarely. Once we've achieved a big target, it will peter out. Loads of people know this, they close the books, and it basically turns to mush. Okay, I wouldn't even look for rotational environments. You'll just get algorithms left. All the big players will leave the market, and therefore you'll just be left with algorithms just messing around, and you're just going to get chopped up. Okay, you're going to get chopped up. So my suggestion is just once you've hit a big target, that's it. Time, it's not on your side, basically. That's it, it's over. Whereas here, obviously, there's great opportunities, but once you've achieved major target, that's it. Because think about it, what's it done? The market's found fair value, is happy. Okay, generally, not always, obviously, if it's early on in the day and we see some huge value building here, and I don't know, for whatever reason, another 5 reasons I've got where I'm expecting the market to continue, then yeah, I might go on. But generally, don't forget, these are not hard and fast rules. You'll never succeed in the long run having, when A plus B happens, this must happen. It's very dynamic. It can change, like I said, but have an expectation. And my expectation generally, and you know what, it is very high, usually 80-90% of the time. I'm just going to switch my computer off when we hit a big target, like crude oil. I'm just making these numbers up. Don't quote me on this, because it will change. Different environments, different average ranges, what period we're in, seasonality will majorly change this number. But let's say, something like crude oil, I've made 50 ticks, 100 ticks on the day. I'm done. Not because, I made 100 ticks, so I'm done. No, because we've achieved something, a major target, and the market's happy, and it's likely to, that's a terrible balanced picture, but it's likely to balance. So anyway, look, I hope these were useful. Like I said, and I'm sorry I went on and on at the start about, the etiquette thing, but it is important, because I don't want this to be out there and someone in a professional environment to turn around to me and say, Envy, why did you do this? Why did you put this down and put this out there in public? Not because it's secret, because can you see it, just a bit of, it lacks professional courtesy. That's all. that's why I said it. But I hope you find this useful. Guys, make 100% use of it, print it off, have it in front of you. Like I said, discuss it with other professional friends who you think may find this useful, and will obviously adhere to what I say. I'd really appreciate it. But yeah, like I said, I hope you found it useful. If you've got any questions, obviously let me know. Or, as I said at the start, talk about it in the Discord with each other. What I'm going to do now is, I'm just going to quickly show you what I want you to do in task 2, where I want you to start marking out the contextual areas for you that you're going to trade in. And I do this every single day. I'll mark them out and I'll show you what I mean. And if I spot any of these value expectations that I've put together, then obviously I'll let you know. So let's get onto the charts. Okay, ladies and gentlemen, so here we are. I've got crude oil in front of me. And what I actually decided to do is, when I was doing the first part of this section, as you may have noticed, I've had some sort of amazing transformation at the click of a switch. And actually, it's not that. I was filming that quite late at night, and initially I planned to go through about 4 months worth of data, which would have been enough. But I thought, you know what? Let me just sleep on it, freshen up. As you can see, I was deteriorating as well with the beard and everything, and so yeah, I thought, let me clean myself up, obviously freshen up, have a sleep, and actually let me go through almost an entire year's worth, right? So you're in for a treat, because I can't be fairer than that, can I? I don't want 90% of people, I keep saying I don't want 90% of people to get it, I want 100% of people to get it. And also I want to give you confidence that I'm not just picking, this is where you should merge, and then give you the perfect example. No, at the end of the day, trading is about making decisions in tough, challenging environments where things are not clear, and at the end of the day, I'm going to show you that's what I'm doing. So it wouldn't be setting a good example if I didn't show you in all environments and all gray areas, that I also make these decisions, and I want to give you the confidence to look. Sometimes you just got to go with it, all right, and have confidence in your decision making, as long as it's logical to you and it's done. Again, the same word, it's logical, it comes from a logical basis and has sound reasoning behind it. Don't let anyone tell you that it's right or wrong. Obviously, I've said this before, if it's miles apart, I am going to obviously pull you up on it and say, look, probably. So for example, this first one here, where value is here and values here, clearly there's no balance overlap here. So if you merge these two, I probably am going to say to you, like I said in task 1, if you do stuff like that, it's back to the drawing board. Let's see where the misunderstanding is. But if there's grey areas, as long as you are applying decision making that's logical, then it's okay. So anyway, like I said, you're in for a treat. I'm literally going to go through, it's almost an entire year, so I'm going to crack on, try and do it as quickly as possible, but as thoroughly as possible. And I also obviously want to show you some splits. I'm going to refer back to the value expectations framework, okay? And actually what I've done is, in the slide, when I was talking about it just now, I'd put, so I've got it in front of me here, because I don't actually have it in front of me. As I said, I don't like rules, and to me, what is in the value expectations are just logical. So, and just to sort of hammer that home that it isn't this set of rules, I've actually taken my name off it. So I'd put Envy's Institutional Value Expectations Framework. Like I said, it's only because I'd never seen it written down like that in the order, and I've just taken my name off it, and it's literally now called, so the printout I'll give you, it's called the Institutional Value Expectations Framework, okay? So it's just a generic sort of framework, logical, and as I said, it applies to every traded good and service. So a couple of things to note. Look, firstly, I normally do my filming at night. It's daytime right now, and even though I live on a quiet street, sometimes there can obviously be a bit of noise because it's the daytime, so I apologize if that happens, but it shouldn't be a problem. And to be fair, I live on my own anyway, so there's no house noise. It just might be from the street or whatever, although my missus is here because she's working from home today, but she's very, very quiet as a mouse, so there'll be no problems from her. And anyway, coming back to all seriousness, to the point, if you've noticed, I'm using blocks here, okay? And I'm obviously looking at crude oil. That's because in task 1, I used letters and I looked at the ES. So I'm giving you every single angle imaginable, okay? I've told you I like to use blocks. I've used letters in the past. Just because you're using letters in task 1, please don't switch to blocks if you like the letters. You know, I've got no problem with either. There's really no advantage, disadvantage. Obviously with the blocks, I do find that I can see more information. So for me, I like it. But like I said, it's entirely up to you. You can always squeeze the letters down, but you know, it's just it's not going to make you a winning or a losing trader, is my point. So let's crack on anyway. And I'm going to try and refer to the value expectations framework as much as possible. But like I said, because my habit for almost 8-10 years that I've been doing this, as of me recording this, has been never to have anything in front of me, I may forget to do it every single time. So you'll have to forgive me, but I'll try my best. And yeah, we'll just basically cover it as we go along, okay? So now, the other thing is, I do apologize. I know my head's over here in the corner. I can't actually see myself. So some of the lines, especially if they're cutting through, will cut through me, but that's okay. What I'll try and do is, very much whatever we're looking at, and hopefully I don't forget, and I'll curse myself during the editing when I just go to obviously put this all together if I have done it, but I'm going to try and really keep all the analysis in this part of the screen, but obviously inevitably there will be some stuff cutting through, and that will make sense. So very much in task 2, I want you to continue doing what you did in task 1, but now I want you to mark the composite levels, okay? So let's crack on. We've got plenty of days. We've got a lot of stuff to cover. As I said, I'm not going to merge these two, right? Clearly, I'm going to merge these two, okay? And I may even merge all 3 days, but let's have a look what it looks like. So merge with next profile, right? You've got that. Let's have a look. Split it. Do you remember I said split it out? See what it's trying to achieve. See, for me, I'm not going to merge those, because if you think about it, that's value area of that day. Can you see? We built balance. We came in. We rejected, right? Very clear. Rejection at the point of control. And then we went imbalanced again. So for me, this day was very much talking to me, saying the feedback was what? I'm not interested in balancing, continuing this balance. So I'm not going to merge those. Okay, so let's do that. So just to remind you, I've merged this and this. Okay, now this is where task 2 is different. I'm marking these every single day. So what I do is, and don't worry, I will show you how to do this. I'll mark them like this, right? And the reason for that is so I can start using these levels in the future. Guys, I've been doing this for years, okay? And this is what I do every single day. Obviously, I don't do a whole year's worth. I just do it every day. It takes me like 2 seconds, literally. Obviously, when you first start, take your time. Take 20 minutes if you have to make a decision. I've been doing this for years. I've seen it hundreds of thousands, if not a million times. So for me, I'll just spot it, do it, job done, move on to the next part of my prep. But so the point is anyway that I'm marking these, but how do I mark them? So look, what it is with Sierra Chart, right? I know at first it's a bit of, I'm never going to get my head around this, but I can't tell you the power of this platform. I've never seen anything like it in my life. Even the platforms I used to spend $1,000 a month on, you can't customize it as anywhere near as this. The speed of this thing blows any other software I've seen away. And as you know, it's cheap as chips, really, let's be honest, relatively speaking. So my point is this, I want you to also enhance and, really take advantage of the quality of this platform. And you're not going to do that if I keep telling you how to do things, right? There's certain things I'm happy to get you started. If you get stuck, by all means reach out. Of course I'll help you. But other things, things like messing around with it. Look, don't be worried. Just do it. Click on things, change them. You can always delete the templates I give you and then reinstall them if something messes up. It's not a problem. So for example, here, you can go in, set your own colors, chart drawing properties. Look, colors, styles, fill color, Guys, I can't tell you how many of this stuff I went through in the past. Obviously, for a few years now, I've stuck with it. But you know, when I initially started using this platform, probably spent months customizing it, messing around with it, changing, those type of things. So don't be scared to do that. But anyway, I like to draw these. So there's only two tools I use for the drawing of this, and that is within here, okay? Tools. Can you see extending triangle? So you can either click on it, right? And then you can do that. I don't want to do that every time. So I like to have a shortcut. Tools. Can you see I've put it as A, right? And I'm going to show you how to do that in a second. The other one I use, as I showed you, is this ray, which goes all across to mark the point of control. Now, you don't have to mark the point of control if you don't want to, but I like to mark it. So I find it very important. I think it's, end of the day, it's where the most transactions took place, right? It's that real fine point of agreement. But obviously we know markets are not generally just going to go in a straight line, are they? They're going to gyrate around it. But nevertheless, point of control is absolutely crucial, because I know there may be a reaction there. So anyway, coming back to this ray, right, which is that horizontal ray is F. So okay, so what you do is you go here, global settings, onto your main console, and then can you see customize keyboard shortcuts? Click that, and then within tools, you see we clicked on tools before. It's the same thing. You're just customizing your tools, and then it's unbelievable, isn't it? The stuff you can customize in this is literally, it's just the bare bones. I love it. Where's it gone? Horizontal ray is F. Do you see? I said it. I don't care if you said it as X, Y, Z, Shift, Alt, Control, S, whatever you want. I don't care. Do whatever you want to do. I have what I have. Doesn't matter, right? Horizontal line, extending rectangle, okay? A. All right, guys? So like I said, if you get stuck on anything, by all means reach out, but play around with it. Don't be scared of it. It's really there to help you develop as a trader. And if I keep telling you how to do things, it's going to actually hold you back. I'm not helping you. I'm actually doing the opposite by not letting you just crack on. But look, if you get stuck, reach out by all means. Okay, so would you agree? That's balance. Why do I extend these? Because I'm going to use these as contextual levels all the way into the future, because the market's telling me something. It's telling me that's where we are happy to transact, okay? So let's move on. So we come in, what happened the next day? Look, guys, there's trading opportunities here, okay? We've got balance. Do you remember when we shift? And I'm going to have to read this, because like I said, I don't actually have it written down, so I can't even remember what number I've put it at. So yeah, do you remember either 4 or 6, which is balance, rotation to imbalance? If the value area is broken, expectation is to go in balance, right? So don't forget, overnight there would have been some action, and when I get you using VWAP, we will look at the overnight session, and you know, more than likely, I mean, it says it closed there, so we may have, I mean, clearly we probably tested this level, rejected it, came up, okay? So at one stage, obviously we were rotational, right? We've come up and we've done what? We've built all this value above the rotational area. And do you remember when we go and break the value area, the expectation is what? For us to go imbalanced. And that's exactly what happened. Opportunity to get long, rejection, excess, opportunity to get long. And then obviously we just closed the day there and it kind of petered out. So this you would not be fading this, okay? That's my point. You wouldn't be playing this as a rotational day. You'd be playing this as an imbalanced day. That's your expectation, okay? Now, obviously, I've got a lot of days to cover. I'm not going to go through every single one like that. You know, you go and have a look at how it played out and so on and so forth. And don't forget, in terms of targets, I said when we're imbalanced, what did I say? Expectation is to go to the previous balance. So basically, typically, you'll have a composite level coming from the past, but obviously I need to start somewhere, don't I? So I'm starting basically at a random date. I can't just keep going back forever, right? So obviously, I'm going to assume there's nothing there. So I don't have any clearly defined targets, but eventually that will change, obviously, as you start to build composites, and that will become clear, you'll see. So anyway, that was a fairly balanced day, but we don't merge it, right? There's nothing to merge it with. Next day comes in, nothing. But what it is always remember, if you don't have any levels to key off, just use the previous day's value area. So what did we do? We broke up outside, we started to build some value. Expectation, when we break out. See, overnight, what would have happened here? We would have traded like this. Do you see, we've built value, guys. The overnight here, we would have been building some value. You would have come into the market. Obviously, you would have seen how supportive was order flow was there buying. And then boom, imbalance, right? Because we've broken out. So what was that? That was, again, the shifts condition, the identify conditions, balance, rotation to imbalance. Okay. So look, guys, you've seen I'm terrible at actually even remembering what I've written down, and that's because you'll get to that stage very quickly where it'll be obvious to you, okay? Obviously, if you break out of balance, you've gone imbalanced, right? It's logical. So to me, I'm not looking at this stuff. That's why I have to keep referring to it, because I don't even, like I said, I don't remember what numbers I've written down here or anything. To me, honestly, it just comes in, I'll look at it, boom, imbalance, right. My hypothesis is look, this is obviously just in terms of composites. There are obviously, if I say a million other factors, exaggerating, but there's a lot of other factors, like I said, the VWAPs and things that will possibly, counter some of this in terms of the conviction I have to get in balance, basically. There are going to be other factors, but we're just focusing on composites. Don't worry about all of that for now. Just think in terms of composites, start to get used to where your expectation is for the day, so you can start building a hypothesis. It doesn't have to work, right? And don't worry, there'll be clues throughout the day telling you, is it likely, has the probability diminished of this continuing to go in balance? So that's yet to come, okay? And you'll develop that over time. For now, just focus on the task at hand. Task number 2, emerging, continue to merge, split if you want, and we'll talk about that in a second. Mark them out now, okay? Sorry, just give me a second. You can see it's gone a little bit. I think I've got 2 here. There you go. Let's remove that one. Sorry, I'm quite particular about these things. So we moved on to the next day, and like I said, we used that area, and then the following day, was there balance? Yeah, it was clear, right? So we're just going to merge those 2. Sorry, clicked merge with prior profile by mistake. Merge with next profile. Yep. So again, we're going to mark this. Okay. So can you see, generally, we try to stay in balance for about 90% of the day. So where have I put this in the expectations framework? It's the first one, isn't it? Balance, you expect it to stay balanced. So very much, excuse me, we tried to do what? We opened, we rejected one side of balance, we came in, we built some value outside. You might have tried to get short, doesn't matter. As soon as you came back into balance, you would have stopped yourself out. Some nice rotational opportunities, and that's very late in the day. And crude does that, okay? Crude can do that in the final period. Near the close, it can just completely do something crazy. And you'll notice this. This is the point about markets having different personalities. Yes, it's volume and players, but what do the players typically do at certain times of day? You'll notice this. So that was very much an end of day move, which is quite typical. And like I said, you'll get used to this type of stuff. But generally, it respected the balance for the majority of the day, right? So I'm going to merge that. I'm going to merge that. Add this point of control in. Okay, and then I'll just adjust this here and here. Now this day, again, so this is the power, guys, of having contextual levels. Is you see what happened is basically the market opened up, it came down, And it essentially rejected the imbalance condition and came in and did what? Attempted to go rotational, then what? Moved to the other side of balance, built some value, nice shorting opportunities, because what? The condition changed. It went from imbalance initially, tried to go rotational, but didn't really build any value in the rotational area, then imbalanced, shorting opportunities, right? And do you remember what's the target? It's the other composite, right? So I'll put here, expectation is to go to previous balance. Where is it? Here. Okay, so it's essentially this area. And look, it did achieve it, just didn't achieve it in the same day. So look, everyone's different. For me, I probably, because of my type of personality, I like to just book profits, go to sleep. So my equity curve tends to be a little bit smoother. Whereas I know plenty of people who'd be shorting here and just say, look, do you know what? That's ultimately my target. So you'll be holding it for a couple of days. So those of you who contact me and say, oh, Envy, you know what? Is it possible using value analysis to hold for a period of time? Of course it is. You can see it yourself, all right? So you can have multi-day. I don't necessarily like to hold for like 2-3 days. I think couple days is, happy medium, because what it is I'm of the strong opinion that when you start getting into more than 2, 3, 4, 5 days, fundamentals do start to have a heavy impact, of course. Because the same factors can be repeated. But on a very short-term basis, I find fundamental factors aren't in the moment. Obviously, when there's a news release, no, you don't want to be slamming on all your risk, of course not. But investors tend to be quite irrational and emotional on a very short-term basis, so it's very difficult to predict all that stuff. I just go with it and have faith that the market, through transactions, has told me already what it's feeling about the immediate fundamental analysis coming up. Obviously, when you start getting into longer term periods, multi-days and so on, 100% fundamentals do have a time to smooth the volatility out and actually make more sense. So, I think 2, maybe 3 days max is a good time period if you want to hold stuff. And I'll be honest with you, I can't remember if I've mentioned it before, but it's definitely something that, every year I've been doing this for a long period of time. Every year I'm looking for things to improve. And as I've become better at identifying what the market is trying to achieve, I have realized I'm selling myself short a little bit just to have a smooth equity curve. Because if you think about it, I like to book profits. Obviously, it doesn't happen every single day of the year, but most days, as you've seen with my FX books and things like that, I've proved it in the audits, I do generally book profits every day. So what that means is my equity curve will be quite smooth, and then I might have a break-even day and then maybe a small losing day, but generally it'll be quite smooth. When you're holding like this, obviously there's going to be days where you don't make money. You might even go into loss, floating loss. You're going to be very flat until that winner, the 2-day hold, pulls through. But look at the end result. And I've recognized this throughout my career, that I have a smooth equity curve and other guys will have quite a lumpy curve, but you're going to make more money holding this thing because you're going to have more size on, because I'm scaling all the time. I'm taking bits and bobs, and my curve's going to be, and what that does is smooths out my equity curve. But I have noticed when I do my end of year analysis, 6-monthly analysis, quarterly analysis, I have noticed that I'm missing opportunity, but obviously I'm gaining here. I don't know, helps me sleep at night knowing that I'm booking stuff. And obviously it fits around my lifestyle, because I do this for a living, and obviously trading basically pays my bills and things like that. So I do, but I have built up a lot of capital, obviously, to allow me to really ram home the advantage like this. So it's something I'm working on. My point is, look, don't do what I do what suits you, and what you think works for you. And it's a lifestyle thing as well, right? I mean, I'm around most of the day, so I can manage these type of positions. For you, you might want to go and do something else. You might be working, doing something else in a different career, and you're doing this part-time. Fine. If you see an imbalanced opportunity and a nice big expectation target away, just switch the thing off, you know, let it run. Obviously keep an eye on it now and again to make sure that something drastic hasn't happened. And we'll talk about risk management and things like that, which by the way is very different to how it's done generally, but you know, we can talk about all that stuff. But I just thought I'd mention it because you can see here a great 2-day opportunity. So anyway, let's go back to the task at hand, which is this. You know what? At the end of the day, it's kind of a trend day. So I don't know if it's the greatest to merge these days, but because it's pretty much in the same region, I'm going to at least look at it. I think it's okay to merge it. Can you see there's a bit of grey there? Just because I merge this stuff and you don't do what I do, but you can see it's actually, it was basically overlapping completely. So kind of makes sense to merge it, right? But it was a trend day. There wasn't much balance built within the previous balance, but because it was within the day, to me, it's pretty good merge. So I've merged it again. This is what I say, make a decision. And if you're confident in it and you say, do you know what? So let's take it out again. Remove rightmost, merging profile, yeah. Can you see it was actually a trend day? The market never really established any balance, did it? It opened and went imbalanced, little bit of value, imbalance, little bit of value, imbalance. Do you see it's basically just constantly going imbalance throughout the day? It never really built any value within this value. So at the end of the day, if that was your logic and you thought, nah, do you know what? I didn't see any value there. It's perfectly fine not to merge it. It's not going to make a big difference. These things will even themselves out over time. So this is why I say, just use logic, okay? Me personally, my logic is, well, it's pretty much within the entire, you know, they call these things like inside days and stuff. I don't like to think of it that way because that to me is like a rule. You know, I don't care if this breaks this a little bit or whatever, or that, and it has broken it. My point is, it's basically overlapping. You know, like I said, I don't like to use rules. I like to use my analytical thinking capability that an algo can't. You see, an algo would say, nope, it's broken it. It's broken the rule. And this is where we have a huge advantage, obviously, because we can use our logic and say, do you know what? Yeah, okay, it's broken it, but it's within the previous 2 days trading. So merge it. And as I said, have a look at them if in doubt. So there's no right or wrong, guys. You've got to do what makes sense to you. That's your alpha. You know, I'll build my alpha the way that I do it. I'm giving you very good guidelines, you can see. But this is why I say we're never going to have the same identical trades. You know, and if you think that's the case, I don't mean this in a harsh way. I'm trying to help you. This isn't the right business for you. If you think that you and I are going to have exactly the same conclusions all the time, we're not. And you know this. This is why in professional circles, I said this before, as I became more senior and I saw juniors come in and I used to try and show them the ropes, and the failure rate was so high. 8 to 9 out of 10 people fail in this. Why? A lot of it is to do with this. They're obsessed. No, Envy did that. I have to get it the exact same as him. No, the market doesn't work like that. You're gonna observe perceptions of value are going to be different. Look, it's so obvious. The thing is, I think it's because it's never been pointed out potentially to you when you do retail education, is what is a marketplace? It's an auction of people. Does every single person perceive value to be identical? No, I know I talked about eBay saying the iPhone is £1,000, but at the same time, your perception of the value of that phone, is it the same as everyone else's? No, of course not. It might be 1,020, it might be 1,030. Someone else's might be happy at 1,060. Why do you think an auction happens and eBay doesn't always settle at the same price? Everyone's perception of value is sometimes slightly different. We have to accept that. That's the game we're getting ourselves into. Okay, so could be a reality check in its own, but I'm not going to do that. Look, at the end of the day, it's better that sometimes I say these things as I'm doing them, right? So I'm going to merge that, and sorry it took me so long to go through that, but it's important. I want you to see that, you know, my logic is my logic and it works for me. It's not going to be always the same for you. Then you can see here, brilliant trading opportunity, right? 10 times out of 10, I'm going to be selling this market, assuming all the other things I look at, which we'll obviously talk about later. But look, value area low. We closed here, didn't we? So overnight, we clearly did what? Built value here, right? Market condition changed. I'm looking here, shift. What did I put for the value expectations framework? Balance to imbalance if the value area is broken, or I put it in 6 as well. If we build above or below the value area. What have we done here overnight? We've built. We've come in, markets opened here, drove up, does this a lot. It loves to close gaps to value areas, okay? So that's something to watch out for. I haven't really spoken about in particular, but do watch out for that. The market will love to close this gap just to complete the auction, and then it will drive down. So even if you got short early and it drove up, personally, if the order flow is correct, I'd be adding. You know, you could always stop yourself out and get back in, and then you'd have a great move. And where's your target? We already spoke about it, previous value. So I know I said I wouldn't open every single one up, but just love this stuff. I want to show you how powerful it is. So I won't keep doing that, but obviously, because time will get, we haven't even done what, a few days yet, but just want to show you the power of this stuff. So anyway, obviously here there's no merges, right? There's nothing to do. Now, this is where you can start to look at splits. Because look, at the end of the day, the market didn't balance from there to there, did it? What you can do is you can say, and I think I mentioned this before, is the period, the TPO period that came into the balance area, where you've basically had the next day. So in fact, let me back up a little bit here, because what's actually happened is this period, what have we actually done? It wasn't there at the time of this period coming down, right? This didn't exist. So here on this day, what would we be using? That area. So you can see brilliant trading opportunities again, right? So here's my point. On this day, right, this day has formed, would we merge with this day? Personally, I'd just merge them straight away because I don't do the splitting thing. I've got my own reasons for it. It's my personal reasons, okay? And a lot of that is to do with, it takes time, I have to sit, I have to take longer. I'm looking at so many factors in the morning when I'm doing my hypo. And I simply don't do it, okay? I haven't found, for me, that's necessarily made much difference, but it is more accurate if you do the splitting procedure, which I said I'd show you, and then you can make your own decision. So it's the period that comes into the balance period, okay? So you click on it, remember? So it's this period, and you click on it, split profile here. Do you see I split it out? Can you see what I'm doing? I'm getting rid of this bit. There you go. Can you see? Perfect balance now. Okay, so you can do that. Do it if you want. I'd recommend you do it at the start of your career. I did this for many, many years just to get the perfect balances, and technically it's correct, isn't it? It's up to you. I don't do it. Look, if I merge with prior profile, do you see? All right, your value area is going to be a little bit more accurate. It's probably wherever it was there. Mine's going to shift. I've got my reasons for it, and like I said, that's my perception of value. I'm happy with it, that it might be not exactly perfect, because I'm looking at so many other things anyway. Fine. But do it properly. And then later on in your career, as you get more advanced, and, you know, because you're going to be taking your time over these things. Again, look, do it how you want to do it. I've shown you how I do it. So let me start again. So the period comes into the balance area, split profile here. You can see actually it is the right way to do it, isn't it? Because you're getting the right balance. So merge with next profile. Okay. Then I'm going to mark that. Okay. So can you see here we've got overlapping balance now. So what I'm going to do personally is I'm going to move that point of control here, and you'll see why I'm doing that. Because what I do is when obviously the previous balance is no longer valid, because the market had fair value here, it's clearly told us it's shifted. It's shifted, right? So not only condition change on the day, we've actually had a composite condition change. This is still very much valid. Obviously, if we go here, you know, I'm going to use these levels. That's not the case. It's where you've got overlaps. Clearly, the market has told you that its perception of value in this area has changed. Okay, so I'll get rid of this now. So I'm going to show you how to do that. Okay, so you just click on it, cut drawing here. Okay, so it's cut. And I just like to tidy up a bit, and I just get rid of it. And then what I'll do is I'll mark this area here because it's still very much valid. Okay, the top of balance, this area. Okay, you can see the market respects it very well. It's just this. Look, the market's built value over it. It's clearly telling me that is no longer an edge. I've removed the edge. I hope that's obvious to you. Okay, so get rid of it. Okay, then we come into the next day, and I'm going to merge those two. Obviously, that's probably some sort of half day in the markets or something. I don't know. Merge with next profile. Okay, then we're going to do what? Adjust. Okay, now we get into a grey area. Can you see why I wanted to do every single day? I'm not showing you perfect cherry picking because it doesn't work like that. All right, and this is part of the problem with half the stuff I see out there. It's all cherry picking crap. At the end of the day, you're gonna face tough decisions, and you need to see this as a amazing opportunity. What algorithm in the world is going to be able to make this decision in a systematic way? Don't happen. Okay, anything systematic, algorithm's got the edge, it's going to get wiped out. You're not going to be able to compete. This, on the other hand, you can really start to think, hang on, what's the market trying to do here? I can merge them, does it look right, etc., etc. For me, all right, it did end up rejecting, but spent a big part of the day with imbalance. I'm going to merge these. You could argue and say, no, do you know what, NV? We opened up, we came out, we rejected point of control, and actually we ended up slightly outside. For me, not enough of the day was outside of it. If all of this, you know, about 60-70% of the day was outside, fine. Do you see? I made a decision based on my logical thinking. You can think of it differently. There's absolutely nothing wrong with that. And, you know, you just deal with the consequences because the market, I'm not going to be the judge in this situation who's right or wrong. The market will tell you. And you can see, end of the day, there must have been some investors who perceived it the way that I see it, which is that I merged the two. And then obviously, look, clearly the market did respect this edge of value here. Either way, it respected it. It doesn't really matter. I'm going to merge them. There you go. And I would have adjusted it. And fine, my way ended up being slightly more accurate, but again, it's not. You're going to find times where you make decisions and the market respects that. You know, we're not talking a million miles apart, are we? It was either the areas here or here, okay? And look, at the end of the day here, yours got more respected, being slightly lower. Do you see it evens itself out? Honestly, I've just learned over time, make a decision, move on. Don't get hung up over it. Because if you look for that, you see this is the problem sometimes of being too systematic, is you'll keep chopping and changing and you'll drive yourself nuts if you try to come up with a perfect method, because it will always even itself out, typically, is what I've found. If you use logic and stick to, your way of thinking, and don't let other people's things cloud your judgment. It's going to work out much better for you. So yeah, so the next day came in, we opened up, we went out, it was in balance. Would you agree those two are obviously balanced? Now, there's an important thing here I want to mention to you. When I've got an old sort of value area I'm looking at, and I've got a more recent one, guys, it's obvious, right? The recent composite is going to trump old value, obviously, because this is new investors. New participants that may not have been active in June have come into the market in July. And this is kind of off topic, but it's a very important point where, again, you can really start to think logically and in an amazing way that, I'm trying to bring this thinking to you that you may not have seen in the traditional space. Do you notice how I said there? Investors in July that participated that weren't there in June. That's out the box thinking. You've got to start thinking like that. Do you know what? These are new participants that maybe weren't there. What indicator in the world is going to tell you that? Nothing. This indicator, okay? And I'm not patronizing anyone. In fact, embrace it. I'm sure there's many times where you used indicators and thought, I'm getting fed up of having to rely on this thing. I want to be able to think for myself. Giving you an amazing opportunity to do that. Okay, so my point is this: with recent value, it's obviously new investors, it's new approaches, it's new perceptions of value. It's always going to trump old ones. So if I have to make a decision in the moment between this value area and this one, obviously the newer one is going to take precedence, and I hope that's obvious. Okay. And I'll even be honest with you, I've had periods of my life where I've actually just not even bothered marking that, because it can sometimes get messy. I'm just trying to give you options that you can make decisions on through observation. So I've got no problem with you getting rid of the entire thing and just not marking this line. I like to have it because it's quite recent. If we start to move on in time and this is still here, I might just, and the market's clearly telling me it's not respecting it. So you see here, we just traded through it. We traded through it single days. Here it respected it quite well. Here it respected it quite well. This, there was a bit of trading. Here, it did respect it, was okay. But what I mean is, if we get a day that just trades over and over and over it, I'm just going to cut it, basically, is my point. So I hope that makes sense and gives you some really good food for thought. So these two clearly we're going to merge. Okay. Okay, so at this stage I am probably just going to, either you can cut it. Sorry, cut drawing here. Or you can just delete it. I'm just going to delete it, okay? So anyway, let's move on. Do you see how I'm not getting rid of any of these? I've only got rid of that. I don't get rid of them until a new composite comes in and we overlap. So here we've got balance, then we move on. We had this day which was fairly rotational and then went imbalanced. I'm not going to merge anything here still. Then we had this day and this day. I'm going to merge these two. Okay, pretty good balance. Now because I merged them, I'm going to mark the composite. Okay, so we went rotational here. We had fairly good rotation. So there may have been opportunities in there. Your final rotation and play, you may have got a little stop out. But look, we built value below. Condition change. What did I say? Balance to imbalance. If the value area is broken and we build value here, where's your target? Next composite. Look at that. Beautiful day. Right? Self-explanatory, this stuff. Like I said, this stuff is unbelievable. It's not an indicator. It's just transaction to transaction. Value to value. Like I said, balance to imbalance, to balance, to imbalance, to balance. That's all it's doing all day long. This just helps you identify fair value so you can build trading opportunities. So I personally wouldn't merge any of this stuff, but again, what you can do is So what you'll notice is typically the best times to use the splits are where you've got not balanced days, but where you've got double or triple distribution days. And if you read Markets in Profile or all the other books that I told you to read, you'll see there's day types. Guys, I got no time for all that stuff. To me, it's all very rules-based. Oh, this shape is a trend day. This shape is a this distribution day or normal. I can't remember. I looked at this years ago. There's all these day types you'll see. Go through the process and actually observe it for yourself. But for me, nonsense. End of the day, I'd rather just make that decision on potential day type myself. All distribution shapes are unique in their own. Investors behave differently slightly every day. So I like to be loose with my definitions of day type. But in theory, it's a trend day, because what is it? Balanced to imbalance, to balance to imbalance. Those are the days where you get value over. It's almost like what I said to you, where you have this weekly profile, and I said I like to split them out. Do you see? That's all you're doing. You're just doing it on a day basis as opposed to the whole week, which is what this could be. I hope that makes sense. You know, where I said I was looking in one of the previous sections of stage 1, I think I was showing you guys that, you know, the problems with weekly profiles is they can have 2 distributions. That's why I like to split and do what? Merge. What we're doing now. That's all you're doing when you're using these splits. And that will obviously happen when you get these double distributions. Do you see? That's just one distribution, one value. Obviously, I've merged it. But here, you could argue you've got 2 distributions. So you want to split that out. Do it. I can't. It's not that I can't be bothered, but it's, for whatever reason, through years and years of watching this, I've just found that for me, I don't want to do the split thing. Like I said, it's a personal decision, but I'll do it so you can see how to do it. So do you see this whole balance is in here? So you can just split it out, essentially. Split profile here. Do you see that? And if you want, you can merge it. And do you see? It doesn't make much difference. I just don't do it. I've got my reasons for it, but it's up to you. Then you've got this balance and this balance, and you see you can then split the profile there. Does it make sense? Hopefully it does. Do you see? And you can merge half a day and half a day in. Okay. Now, what you can do is, I'm not going to do it. In theory, what you should be doing is doing that. I'm not going to do it. Why is that? Because what is this? What exactly is this? Let's have a look. It's half of this day and it's half of that day. Can you see? It's a day. Why am I going to remove such a powerful composite that I've got here? 1, 2, 3, guys, 4 days I'm going to remove for what? 1 day? No, I'm not going to do it in a million years. Merge profile begin, merge profile end. All right, if you want to do it, but it's meaningless. Might as well just be a day. I hope you can see that. So I'm not going to do that. So I'll leave that there. Even here, look, in theory, can you see? This is, in fact, I'm glad I showed you. This is another reason why I don't necessarily like to use the splits, because I don't want to get into these grey areas. Should I do this? Should I? No. Let me try and make my life simple. That's why I don't do it, but do it. Do it for the next 6 months. Keep splitting until you observe and you think, do you know what? Maybe I won't do it, because what Envy showed me here, where you start to get into these, having to make these silly decisions about like getting rid of old composites that are so powerful, 4 days value, and replacing them with half and half. No, I don't want to do that. And then it might make me merge, as I showed here, this half day with this 1 day, and then I would have to get rid of some of this powerful stuff, as in multi-day composite value here. If investors have told you for 4 days they're happy with value, why would you replace it with something like 1 day? balance, 1.5 day. I'm not going to do it, guys, okay? So, like I said, it's up to you. Do the splitting, keep splitting. It's different if I've got balance day here, I've got balance day here, I've got balance day here, and I'm merging all of this with this split. Different kettle of fish. Fine, then I will chop all this. But I'm not doing that, am I? I'm merging like literally this half a day, which wasn't even balance. Show me, where's the balance here? There's no balance. It's just an imbalanced market. This is balance, right? This is a balanced day. This is a nice balanced day. But you can't see that because I've covered it. This, guys, is just nothing. The market couldn't agree. So, you know, at the end of the day, I'm not going to do it. This is why I like showing you day by day by day. You can see the decisions I'm making day by day. These aren't cherry-picked examples where it's just everything's perfect. Life's perfect, yeah. Indicator, or whatever's told me to merge. So, no, it doesn't work like that in reality. So I'm not going to merge any of this stuff. You can see the market essentially went from imbalance, didn't find value here, but went balanced in this environment. Good trading opportunities, right? We come in from an imbalance perspective. We build value here. Where's target? Do you remember? In a balanced rotation environment, expect to test the other side of balance. Probably take some profit there. Where do we go? Other side of balance. That was, I put that as number one. Okay, so I'm going to try and speed it up a little bit because obviously we've only just not even covered a month. Then we come down. Yep, I'm going to merge those two. Do you see? We respected it there. So let me mark that anyway. Okay, merge. Where it's obvious, I'm just going to do it. I'm not really going to give you my logic for it. It's just obvious. That clearly was a bit of a wild day, so nothing doing there. So I merged those two, didn't I? Merge with next profile. Okay, look at that nice drive off the point of control, as in towards the end of the day. Do you remember what I said? That last period towards the close in crude oil is completely crazy, guys. I generally don't trade that last 2 to 230 towards the end of the day. Crude has this thing where it can be balanced all day and then it can just go in balance just literally in the last half period. It's crazy how it does it. But it's fine. At the end of the day, we're trading from 9 in the morning US time till 2 o'clock. You've pretty much got 90% of the session where it does tend to behave itself to some extent. So don't worry about that. Don't let one period put you off. It's meaningless. I think earlier on we were looking at it and it did that in one of the earlier days. But you see, it's not like that every day, but it does have a habit of doing that. Then we've got, I'm not going to cover every single day. You can see it's obvious that the market is respecting this value area. Here we had a bit of a choppy day. I would probably merge this, this and this, right? Because it's all within the same sort of period. Okay, and can you see the lower value area stayed the same? Amazing, isn't it? So I would have that area there. Then here, you can see very much respected by the market. Very, very strong area here. Confluence of transactions, not 50% fib with some trend line that makes no sense. If you saw my footprint example, you saw what happens to trend lines when you switch from minute-based charts to volume-based charts. It's all garbage, guys. That's not confluence. This is confluence of demand and supply, not that demand and supply nonsense I see people drawing on, their charts. It's more actual demand. I'm talking market orders, right? Value area of. How are these value areas formed? statistics based on actual market orders, transactions. And that is incredible confluence. So we opened up, we didn't test the other side of value. We drove down. You may have tried to get short in here. Doesn't matter. Take a little hit. And as soon as you see value building here, amazing opportunities to go to the other side, right? And in fact, at the end of this day, I would have merged it. Obviously, I'm going to merge it into that, right? So there is some overlap here, not enough for me to necessarily want to get rid of this. Look, it's such a small amount. For me, that's incredible confluence. And look at that. Beautiful day. Absolute killer of a day. You should be killing it on this day, guys. Balance. Balance environment, stay imbalanced. As I said, value expectation is what? To stay imbalanced. If you're balanced, why would you want to target out of balance? You wouldn't. Obviously, the exception to that is if we start to build, as I said, around this area, and then you can think about breaking early and preempting it. But unless those clues are there, just do what the market's telling you to do, which is it wants to stay rotational. So you can see very much the market stayed within balance. Makes sense. It's going to merge that. Okay, and adjust these slightly. This day, nothing doing, right? It's up to you whether you mark these point of controls. You can just take them off if you want and just remember where they are. But do you remember, like I said, a day comes in and it just chops it off, and I like to maintain it. It's up to you guys what you want to do. Can get a bit messy, but I like to keep it on there. Then you've got this day, nothing doing, right? You've got this day. Okay, so we're going to leave that region. Do you see I still leave these on? If I come back 2 months later to this area, I need to know where was fair value. Where in this area between 60 and 65 did the market determine fair value to be on a composite basis? Okay, so we're getting into August now. I'm really going to be quick with a lot of this. I'm going to merge. So because I'm rushing a little bit, if I make an obvious mistake that whilst you're watching this back, you think, oh, why didn't he do that? I apologize, but I'll try my best to be as accurate as possible. Because I really want to get through a lot of this, just because I want you to see day by day by day by day. Almost 1 year period, if I'm not missing a day. You can't say to me, oh, Envy, what happens in this environment? You wasn't clear. No, I'm showing you everything. I'm covering all bases so that when you face this, you have a good point of reference to come back to. Okay, so clearly I merged that. We went in balance. Nothing doing there, nothing doing there in terms of merging. This, nope, because we had these periods in between. So obviously I'm not going to merge that. This and this, yep. See, I'm going to merge these days. This and this, I think, is a fairly good balance. You can have a look at it. For me, okay, I've said this to you before. It's kind of a grey area. You could argue to me, yeah, but Envy, do you know what? We came in, we rejected value, point of control, we came out, we built a little bit of value there. For me, that wasn't enough for me to say, no, it's not part of that. I'm quite happy to merge that, and I'm going to merge it. Make a decision, move on. Like I said, we're not always going to be identical, and I've said this before. It's not the right. It doesn't work like that in this business. It's people, and like I said, their perceptions of value can be different, as yours and mine can be different. So what am I going to do now? Can you see the overlap? I'm going to cut it. Cut this drawing here. See that? Old one. Not going to use that anymore. Finished. Point of control. Get rid of that. Mark this point of control. And like I said, look, if I make a blatant mistake, obviously I'm not marking however many 200 days there are here every day, right? So obviously I'm rushing through them. I might make a glaringly obvious mistake, and I do apologize for that in advance, but I'll try my best not to. This day we went rotational, broke out, and obviously went in balance. So amazing day, just literally just chop through everything, didn't it? Happens. Markets aren't perfect. See, problem is I can't merge this with this and this because we've had this. It's gonna look, if I try and, do you see that? I'm not going to do that because it's just nonsense. So when we have days in between that went out of balance, we come back into balance. We don't merge that, okay? Okay, so for now, very happy with all of this. See how powerful this is? Market condition, guys. Here, it's balanced. Here, we went imbalanced, and you could have keyed off some of these previous levels. Obviously, you'll have tools to help you do this and guide you, like the VWAP. It's a framework that all institutions are using. But it's a grey, there's going to be grey areas in that, but I'm going to give you the framework so you can start to develop the understanding of it. As I said in the next section, stage 2, which after this, we're going to get straight onto that. So here we've got very much the market is respecting this rotation. You see here, respecting it. So I'm going to merge these two. Okay, and therefore this old one, cut it. Yeah, agree, because it's getting overlapped with new value. New investors have come into the market. They've told us their perception of value has changed. So I'm going to merge that. We had a nice rotational day there, which you could have taken trades off using, obviously, contextual levels from this composite area. We'll come back to this, the actual specifics of entry. Don't think I sit here with my pen going, oh yeah, you know what, I'll just, yeah, we opened it. No. The actual intricate detail of getting into trades, out of trades, that's done on a chart using the VWAP, so don't worry. I'm just trying to get you thinking in terms of the, what do I call them, the value expectations framework. Can you see that? I'm just trying to help you develop some hypothesis thinking. This is the very first part of it. I don't want you to think, oh, Envy's just coming in. What is he doing here? Saying, oh, I would have done this, I would have done that. No. That's not what I'm doing at all. In fact, I'm slowly laying the seeds in your mind of why we have expectations and why we build them, and how we do them and why we're doing them in terms of the composite. We're going to then combine this with the VWAP, and these levels, I'll have them marked on the chart, okay? And I'll show you how to do that in the future. So, merge with next profile, yep. So I'm going to merge those two clearly because there was balance there. Okay, then we kind of didn't respect this at all in this day. We had a bit of a choppy day there, and then we came in here. Would you agree? Look, they're just overlapping, guys. I'm going to merge those two, no questions asked. Investors came in and they told us, do you know what? We've got no interest in this balance area and this balance area. This is now our new balance area. It's within two of them, but clearly market changes its mind, you know. Like I said, it's normal. It's a good thing. The market's giving us feedback that actually it's no longer interested in this area. So get rid of that. Cut drawing here, and we'll just keep moving on. So you see that now, got rid of that, get rid of that point of control, If I forget to mark these point of controls again, forgive me. I'm trying to do loads in one go. It's been years since I did this. I used to do this obviously when I first started looking at this. Surprised I'm still in a relationship. I used to spend weekends on Market Replay doing this stuff. Literally, it's like 7 days a week, you know. It's the sort of commitment it requires for you to... obviously, you can do it around your job and stuff, but what I'm saying is it's not always going to be during market hours, right? You're going to be doing this stuff at weekends, evenings, just doing loads of merges. Obviously, these days, I don't do it. I just do my one day and then I go off, but, you know, it's just normal. That's going to take a bit of time. Now here, I'm not necessarily gonna, I'm not gonna merge that and that, right? Because the majority of the time it's spent outside of value. But do you remember what I said? When another day comes in, it can change things completely, because the market's telling us, actually, I'm in value there. So I'm going to merge the four. So this is the point where sometimes 3 days might not be a merge, but fourth day comes in, gives us a bit of information. I talked about this in task 1. So I'm going to merge that, I'm going to merge that, okay? See, that needs to adjust. That needs to adjust. What I might do is I might speed up a little bit, just because some of these are quite clear, so I don't want to obviously go through one by one. But look, these 3 days I'm going to merge, right? So this day I wouldn't have merged, new day I would have merged, right? And I would have drawn lines and I would have cut that out, but just to save time, obviously I'm going to merge it with that one as well. So I recognize it wouldn't happen obviously all at the same time. I would have had 2 days merged and I would have drawn it in and cut, and then I would have done it. But just to save time, I'm just going to do it all in one go. So let's cut that. Hope it's becoming clear what I'm doing here now. Okay, guys. So all of these, we're no longer using them. See, it's no coincidence. Point of control, big value was there, then it was there. You'll see little things like this all the time that make you stop and think, oh, okay, that's what the market is trying to achieve, giving you little clues. So here we've got a new day where we've obviously gapped. We haven't necessarily, let me just have a look at this. Yeah, we closed there and then we gapped up, didn't we? So obviously I'm not going to merge that with that, right? Then this day comes in. It's a tricky one. It's a tricky one, isn't it? I don't want to keep repeating myself, but you can see it's very tricky. I'm not going to merge them. Do you remember I said, if in doubt, open it up. See, what's the market trying to achieve? And here we spent such a huge amount of time outside of balance. I'm not going to merge those two, I'll be honest with you. That makes sense to me. And I've got a pretty good composite here. And there you can see, I'm not going to do this, obviously I keep saying it, I'm not going to do it all the time, but you can see some decent value being built here and trading opportunities to get short and target what? Previous composite. Again, it happened over 2 days this time. Multi-day holds. I've noticed this. Do you know what? I've noticed this so much over the last few years. As my obviously understanding of value has got better and better, it's just become clear to me that I am shortchanging myself a lot by, I might get short here, take my profits, book profits, be done for the day, smooth equity curve, I told you already. I could potentially be holding some of this stuff much longer, but it's not a negative thing. You always got to recognize potential opportunities you're missing out on and do something about it. I don't dwell on the past. I don't care. I've had an amazing career up till now, and trading has given me an amazing lifestyle, according to how the sort of things I want to be doing. And so I'm very grateful. So don't get me wrong that I have any regrets. It's not that. I'm always thinking, how can I improve? And this is one of the things, I'll be honest with you, and I'm showing you just because like I said, I like to say these things as they crop up, is I have noticed this a lot, is the market will achieve what the expectations are. It just won't necessarily do it in one day or in a smooth motion. So, it's kind of that trade-off I told you about where, do you want a smooth equity curve or do you want a curve like that? But at the end of the period, you end up with obviously, and sometimes you could argue, you know what, it matters what's in the bank account at the end of the month. And if at the end of the month, you're going to end up with that much rather than that much, but you may have had to take more drawdown and it's a bit more lumpy, but manageable, why don't you do it this way? Each to their own. I'm just pointing these things out to you so you're aware of them. For most of my career, I've always preferred this smoother curve and just accepted that I may make less at the end of the month, but You can always make that up by obviously trading bigger size, but again, that has its trade-offs as well, psychologically and risk-wise. Obviously, it has its trade-offs. So, you know, just trying to point those things out to you. So, yeah, I said I'm not going to merge those two, but this and this, pretty good balance, I think. Clear balance. So you can split these out, right? Do you remember I said to you that was up there? We came down into this period, so I would split the profile here, and in fact, probably even. We don't want to do that. Undo this profile split. We can probably just get rid of that whole TPO that came in. Okay. So as I said, I want you to be doing this stuff, and then if like me you want to drop it, you can. So we've got balance here, and funny enough, so I've changed my mind now. It's very much on the edge, isn't it? Majority of the time was below. Nah, it's nothing doing there. And in fact, you can see it came down, respected the edge of previous value very well. Same here. We initially would have been rotational overnight. The condition changed because we broke out the value area low, and potentially you would have had some shorting opportunities, and you might have tried to get short there. Obviously, you know, you're not going to win 100% of the time. That could have been a stop out or even a break even, or depending on how you manage it. Again, we'll get into that later. Then we very much come back in. No merging. Not going to merge that and that, am I? I'm not going to merge that and that. That and that. You could argue, you see, again, it's a grey area, and this I want to be honest with you and show you that it isn't perfect. You're going to have to learn to make decisions for yourself, which, look, at the end of the day, no one's a child watching this. You make decisions. I totally respect you, and I know you make decisions in your work every day. I know you're perfectly capable of doing it. I don't mean to say learn to make decisions as in generally, of course not. I totally get it. In most things in life, you're probably making a million times better decisions than I ever am. I'm just talking specifically when it comes to this. Apply what you already have, just apply it here and just try and use a bit of logic, and, you know, you're going to do very well if you do that and just accept. Do you know what? It's not perfect. There's different people in this marketplace with different perceptions of value, and I just got to try and work around that basically to the best of my ability. And actually, it's a great advantage because I keep saying it. Algorithm can't do it, you can. So I'm in two minds about this. I like to just make a decision and go with it. You see, if these were quite balanced in the sense that had decent balance, and this just maybe had some nice overlapping, and this is the key decision maker for me. If this had good balance, it doesn't, does it? It was quite a strong trend day. And if you think about it, what are trend days? Obviously, I did say I don't like to use the word trend day, but it is used in that book, Markets in Profile. But I mean it more in terms of profile, a trend day, imbalance day, in terms of profile. We didn't really build any value anywhere here, did we? We tried, but really we just had a lot of imbalance. It's like what you call the triple distribution day. Really, because of that, if it was nice, this was nice, this was nice, I would have merged these three. Sorry, that is a terrible drawing there. Don't know what I was doing. But it wasn't. So I'm going to leave it. Let's move on. Clearly that and that, I'm going to merge these two. You see, you can't split this out. If this had happened first and this second, you could have split this out and merged it. But you see, this got in the way. So you got no choice but to just merge it as is. I'll show you what I mean. You can split this out, right? And actually, I didn't do that correctly. Sorry, just bear with me. Join it back up. You can split this outright, but the problem is you can't merge this with this because that's in the way. So you have to merge all of them anyway. So for me, that's pretty good. It's pretty good. It's good enough. So what I'll do is I will. That's a decent bit of value. There's a little bit of overlap here. It's not ideal, is it? Obviously, I'm going to get rid of this now, right? Can either go all the way back to that, just chop it off, cut drawing here. Or if you want, you can just cut it, in this area just before it starts. So because they're very close together, these two, I don't like, obviously if this was down here, I would have cut this, but the clue's in the profile. Very little volume traded here. The market's still happy to respect this area, so I'm just going to leave it. No harm in just leaving it. Again, I'm sorry, I know I cover some of this stuff. I did say at the start I would, but unfortunately there's nothing I can do about that. Sorry, just give me a second. So the next day we rejected the point of control, which I don't know if I've forgot to mark this on all the previous ones I've been, but I think I've got the point of control in most of them. But anyway, so we rejected, we came down and obviously bounced at the next. We went straight through the value area and then we came down and bounced off the point of control. Then we had this day, clearly no merging. These two clearly going to merge them. Okay. Guys, I've been doing this for years, and actually if you go back to even my very first IGTV videos, you'll see this going on my charts. You'll see all of this, and now you can see what I'm doing essentially. I believe we had a big gap up. Just double check. That's why I like to show you crude, because crude can be a bit crazy at times, so it forces us to make decisions. So we gapped up. Obviously that was a huge fundamental event. No merging there. I'm not going to merge that. Then we came in here and this day and this day, I'm not going to, there's a little bit of overlap, but we spent the bulk of the day outside of this value area. Okay. See that? And this was value here, and bulk of value. Like I said, if you're not sure, I keep saying it, but it's important because it's the first time you're seeing it. Just open it up, see what the market tried to do. I agree it came back in, but that was towards the end of the day. It wasn't enough for me. If I had seen this much volume coming back later into the day, yeah, I would merge them, but I didn't. Again, make a decision. To me, my perception of value might be different to yours, but that happens. And it's true what I say, right? You and I, if we're on eBay or wherever, it doesn't matter where we are, Tesco, eBay, Amazon, whatever, our perceptions of value for something can sometimes be different, and it plays itself out even here. So, look, I'll merge them just to show you that what it looks like, and you could argue, Envy, it looks all right to me. Fine, go with it, see what happens. Does the market agree with you or not? And that's how you'll learn. At the end of the day, it's normal, isn't it? Even if we're on eBay, whatever it is, Amazon, I keep going on about this stuff, but this stuff isn't beyond you, because you've got to accept, even in the real world, if you and I are bidding on something on eBay, are we going to have the identical perception of value? Of course not. There wouldn't be a marketplace. The world wouldn't be able to function if we always thought everything was exactly the same. It wouldn't work like that. So, if you want to merge them and market, do it. I'm not going to. And then look, it eventually evened itself out anyway, right? Because I'm obviously going to merge this and this. And then this day came in and the whole thing gets merged, all right? So, okay, I'm skipping merging and drawing, but that's because obviously, I want to, I'm conscious of time and I just want to start to speed this process up a little bit. I keep saying that, but I'm not doing it. Okay, so we've got that. Again, I do like to mark these point of controls. I know I keep saying it, but it's up to you if you mark them or not. I just want to repeat one of the rules. Don't forget, this went balanced. Where's the expectation? Other side of balance, okay? And actually, do you know what? This, I thought I'd undone every single split in this chart. So obviously I could start again, because obviously I want to merge them all back up for you. I think I may have forgotten this one for some weird reason, but anyway. So yeah, these are 3 separate days. So obviously we've had this rotational environment that we go in balanced. Then I would merge obviously that, right? And you would have balance area here. I'm not going to draw it in and then cut it and then not cut it, but obviously I would merge it with that and then adjust it and so on and so forth. Or I would have cut this area out. So I'm just going to do it all in one go, just obviously to save time. But yeah, apologies about that. I thought that I had unmerged every single thing in this chart to do it from scratch, but anyway, happens. So clearly I'm gonna either put it up to there, or it doesn't really matter. I'll just put it up there, be neat, and move on, essentially. So this area is a very balanced period, but as we know, crude oil this year has been completely crazy in the sense that we've had loads of imbalance. It's been a historical year, so that's why I really want to just fly through a lot of this, because I want to show you different environments and how throw anything at me and I'll make a decision. Okay, that's the key to really building edges, you know. So this whole period is imbalanced, 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 imbalanced. And just to keep reiterating a lot of what I do say, but it's a good reminder for you. You see, this day, we didn't really have anything to key off. Like this area was obviously quite above it. So you can always key off this, you know. So we opened in a rotational environment. You might have taken a little hit and then we go build value and then you can take an imbalance trade down. And you can actually see here, there is trading that's taken place historically in this area. I'm not going to go back there, but you probably have a composite there to help you build expectations of. But as I said, there's only so far back you can go. So I'm going to speed through a little bit. So if I make any blatant mistakes, I do apologize. This and this, I'm going to merge them, I think. I'm at least going to see what they look like. Yeah, you see that? That's pretty good, isn't it? This is obviously not going to merge with that. Then we come back in. I don't really like these 3. I've mentioned it before. I want to see just a little bit more within here. If you merge it, it's not wrong, okay? At the end of the day, I don't want to keep repeating the same point. Just make a decision and run with it. It's your perception of value. I talked about it a few minutes ago. Just make a decision and move on. These 2, clearly you're going to be merging them. Okay, that I'm going to obviously keep it. This, you can see I'm going to cut this, aren't I? Cuts there. Okay, get rid of that point of control. Didn't put that point of control in. Apologies, I'm trying to speed it up a little bit because we have got a good 6 months left to go, haven't we? And I want to give you a good, as I said, sort of range of scenarios where you're inevitably going to face in the future. So we've merged that. That's outside of balance. Clearly no merge there. This point is, obviously you're going to be trading this as in a rotational way, targeting what? Other side of balance. You see the market has respected this for multiple days. So this would have been hopefully a great period of alpha generation for you, because you've identified confluence here between the edge here, the value area low here, and the value area high here, confluence, and then taking trades off here. And we'll look at this when we introduce the VWAP, obviously. Okay, so clearly I'm going to merge these one by one, then I'll have a new line, then a merge. So what I mean is I'd merge that, then I would draw a new area here. Going to get rid of this, right? Then I'm just going to keep merging them and adjusting, merging and adjusting. So I'm not going to do that now. that I wouldn't bring it in, but then the next day comes in and I would merge all of them. Right, hopefully that's making sense to you. Okay, so I would adjust. I would have been adjusting obviously every time I brought in a new merge. That day we broke out of rotation. What's the expectation? To go in balance, stay in balance, go to the next. You can see the power in this. Built up value, went in balance, target, edge of the next profile, the next composite. As I said in hesitance, if you even use the word rules, but expectation to go to the previous balance, typically composite. So, okay, we move on. So I'd be using all of these historical levels to trade off until we get new perceptions of value. So we had this imbalance day, imbalanced, balance, balance, balance. Okay, so I wouldn't, obviously I'd be trading this as a rotational day based on this earlier composite I'd marked, then would merge with the next profile, and essentially you can see this becomes redundant, doesn't it? Now, because I'm rushing, I know I haven't been marking these edges. It's up to you if you want to do it. Like I said, I go through periods where I mark them and I don't. But you can see it starts to become a little bit messy. It will be quite clear when we're on the VWAP chart. This will be nicely spread out, so don't worry too much. But sometimes I go through periods. What it is look, it's not that I'm just arbitrarily deciding I don't want it. You'll see there's always logic behind everything I'm doing. So I would probably maintain it whilst it's being respected, is my point, right? So here we're respecting the edge of this old value, even though sorry, that hadn't actually formed at the time, but the second day, once this is formed, so here we respected it. But then here, look, we just ignored it. We kind of built value over it. So let's get rid of it. And same with, I don't know what this is, but it's probably a previous point of control or something. Get rid of that. Again, you can split this out, but it's only going to be half and half a day. I'm not going to merge them anyway, so why even bother? Then this day comes in, goes rotational, and you see it respects this historical composite. This respects here. Can you see, guys? Market respects value. Why? Because I said it before when I was building the expectations framework. This is how algorithms are programmed, not because they've come up with this amazing rule, but because it's how it works in the marketplace. I've gone through this so many times. This is why I went through and spent so much time in auction market theory, so you understand. Market's always looking for old value. Do you remember milk? Something happened, disruption, fundamental disruption, whatever. And it happens in oil. Oil has what? Supply, disruption, demand, disruptions. And always go and seek old areas where we've established, where the market's happy to trade. It's obvious. It's auction market theory at its finest. That's all it is. Don't think of this as rules. Think of it as, logically, this makes sense to me. I see it happening in the marketplace. This is just a marketplace. Okay, so, but anyway, with regards to this particular exercise, there's nothing for us to do. They're all imbalanced days. We come here. I'm not going to merge any of this stuff. They're all just so outside of each other in terms of value. Then we come in to this period. Again, like I said, it can get a bit messy because you're marking the point of controls. It's up to you. I like to have them. If you don't want them, get rid of them. But I find that they're very important for me. So, you know, this dotted blue line is the point of control of the composite, right? So even here, I forgot to mark it, didn't I? I'm just taking off there. Okay, so this day comes in, nothing. Then the next day comes in clearly balanced. So let's merge them. Okay, and we can start cleaning this up then. Okay, so clearly this profile, I'm going to cut it, and this I'm going to cut it. Agreed? Because what? This balance overlapped this. So it clearly told us this is no longer an edge. Do you actually see what the market's doing here? I talked about this in task 1, where the market loves to fill in areas of low value so it can complete the auction. That's all it's done. What is this? This is just a previous balance area. This is just a previous balance area. What's the market done? Filled it in, guys. Okay, that's all it's doing. It's all it's doing all the time. Okay, so this isn't ideal. It's a trend day, but I probably would merge it anyway because it's overlapping. It's not the greatest, but just make a decision and move on. Got bigger things to worry about. Okay, I'm gonna merge that because we haven't gone anywhere, right? Just haven't gone anywhere. Easy decision to make. I'm just gonna keep merging these and adjusting them throughout this whole period. So I'm not gonna do it for every single one. Obviously, as every day comes along, you just keep merging and adjusting and trading in a rotation environment. This should be an incredibly profitable period because you're just doing what? Do you remember the expectation? You're in a, how did I write it out? Rotation expectation is obviously to stay rotational, so you see that in the conditions framework, and then expectation is just to test the other side of balance. You're just going to be constantly playing this as a rotational environment. Okay, so eventually you would end up with that. Mark the point of control. Okay, I hope this is useful for you. Do you see I'm not skipping days? Just every single day for almost a whole year. So you've seen, you know. Don't want to sound like a broken record, but this is how it is, guys. And I hope you can see there is no perfect indicator. Don't exist. Go stop. Dump all that stuff. Perfect indicator is you. Start to have confidence in your own abilities, and I know you do. Again, it's not I'm not trying to speak to anyone like a child, because at the end of the day, I've said this before, many of you are older than me. I've got a lot of respect for you, and what you've probably achieved in life is 10 times better than what I'll ever achieve. But when it comes to trading in particular, I've been very fortunate to have seen the light, essentially, that I'm not going to let some squiggly line dictate to me what I should be thinking. No, let me make the decision, right? I hope you see it's a good thing that we have all these grey areas because we can start to add alpha. So again, I could split this out, but because it's only half a day and 1 day, I'm not going to, but play around with it, you know? So like I said, you can split it out if you want. And actually, I wouldn't split because you see most of that period is within this balance, so you don't want to just undo this. So what you want to do is you want to actually split it there. Okay, so that you can, in theory, merge it and have a composite there, but I don't do it, okay? So I'm not going to mark it, but in theory, if you really wanted to, you could change it up. There's nothing wrong with it, because this is a very strong composite. Obviously, the more days you have, it's going to take something big for me to get rid of this, but here, what was it, Wednesday, Thursday, it was a pretty small composite, wasn't it? Yeah, it's just 2 days. I've lost my place, unfortunately. Yeah, I said you could merge this, isn't it? But I'm not going to, so get rid of that. But you can if you want. We've gone in balance, then we've got 1, 2, 3, 4, 5, 6. So look, I'm not going to do them one by one by one. Clearly, there you're going to do nothing. Next day, you're going to merge it, and you're just going to keep doing that, right? Here. Okay, so nice overlap here, and look how the market just respected that area very well. Okay, so it's going to pick up the pace now. So clearly this day comes in, nothing. This day I would merge it with that day. Then I'm going to do the same here and here. Okay. Okay, now obviously I'm going to cut this. So I did say I apologize because I'm going so fast. I may forget sometimes to mark the point of controls, but because don't forget, I'm only doing this literally once a day, if that. If there's a merge, then I'll mark it, otherwise I won't. Obviously right now I'm trying to do it about, you know, a couple of hundred times, so and at pace, so it may unfortunately forget to mark that point of control. So here is a tricky one. So you come in, let's have a look. It's pretty good. I mean, it's that grey area. Do you see what I mean? We've actually, normally I say, oh, if we just spend a couple of TPO periods within here, I'm not going to mark it. But here, we spent a decent amount of time, at least 50%, and market clearly rejected going in balance. I'm going to merge them. Keep saying it. If you don't agree with me, it's fine. There's no, and I've said this before, obviously if you start to merge something up here with this, or if we're clearly out of value and you're merging it, then of course I'm going to say, look, maybe you shouldn't do that, but you're not doing that. So we're going to mark, well, it's going to cut this. And I'm actually going to cut this as well. Because what? We developed the volume right over the top of that value area high. So, right, we developed the volume right over that. Okay, so this day comes in, I'm not going to merge it. This day comes in, I'll merge the two. Right, I'll have a new profile here and I'll just cut. Do you see, as new profiles and new investors come in and perception of value, don't worry about it looking messy. It won't. It will sort itself out very quickly, because look, it's already starting to become quite clean. So I need to get rid of that. So I need to get rid of that. Get rid of that. Do you see it's already cleaned up this area? I'm getting rid of this. I like to have these lined up, but honestly it doesn't matter. It's just me. I'm a bit of a neat freak, but and then you've got your point of control there. See, so all of this is old now. You're only interested in this, this, this. See, it's very clean. Very, very clean. This and this, I would merge it. You see this rotational environment, but I'll merge that, and then I'll just adjust accordingly. Then this and this, I'm going to merge them. It's pretty much inside, isn't it? So, fairly clear. This one you could argue either way. You really could. I'm not going to do it, but I assume when you merge it, it looks decent. Yeah, it looks pretty decent, but I'm not going to merge it. It's amazing, even on different days, your perception of value can be different. Ask me on this particular day, who knows what I would have done, but as it stands, can you see, to me, I like to open them up sometimes and just apply a bit of logic. Look, that's why, because I could see it anyway with my eye, and I'll tell you why that is because I can see the open and close. Can you see the blue open and the close? So I knew that the bulk of it had built in a manner that was above. So even though, yeah, I agree we came back in the last period, ultimately, let's be honest, bulk of value was outside. So I'm not going to merge it. That's my logic. Make a decision. Move on. You know, it's not just one day and then that's it for the rest of your life. The market's every day, right? This and this I'm not going to merge. This and this I'm not going to merge. This and this I'm not going to merge. This and this I would merge. Okay, this is a bit of a grey area, happens, but ultimately the bulk of it was outside, so I'm not going to merge that. This day comes in and really it was outside of that, so I'm not going to merge it. These two I would merge. So notice I'm not opening them up and going through the conditions right now, because obviously I just want to get a bit of a move on. So there's your rotational condition, playing either side. Then we go imbalanced, play it as an imbalanced trade. Okay. Let's mark these point of controls. See, this is a really good example of what was it? The rule on the framework is the balance to imbalance, right? If the point of control holds. So this is a really good example of that. Do you remember what I said to you? We could be in this balancing environment, right? Market opens there and it builds value on the point of control, and it starts to, sorry, my pen's a bit annoying. Every time I hold it down, it brings a circle. Apologize. Just ignore that. It builds value, and then we look to break this. Okay. So I've said expectation 1 to fail, because normally you'd be playing this as what? A fading environment. But here, if I see value building on the point of control and we build value and there's order flow coming in, guys, obviously pressure's building. It's like a pressure cooker. Pop, it's going to pop out of this area, isn't it? So you've got to recognize that. You've got to be very good at recognizing, and we'll look at that, how your rotational environment, market condition maybe, it's not always going to do this perfectly like that. Sometimes this value might start to build here, right? Nothing wrong with that. You know, who are we to say to people, no, you can't start to change your perception of value early? Of course you can. Of course you can. You may be just balancing here, and rather than go to the other side of balance, you may stop. Do you remember I said I like to take some profits here? We might see value building, and which we do here. And I love to preempt it. Sometimes I will look for us. I could start getting long in this area and look for us to pop out, break out, and change market condition early. The alternative is what? You wait for value to build here, which is the different condition, isn't it? It's the if value area is broken. I like to sometimes get in early there if I see obviously conditions on the VWAP and order flow coming in. You can be safe and do it there, but then you're getting in later. You're obviously risk reward, if you like to call it, is going to be different. So, you know, there's no free lunch in markets. Obviously, it's all about trade-offs. So, where were we? So anyway, so we're building these three clearly balanced. So you mark that out. The next day comes in, mark that out. I probably wouldn't mark that out because it rejected, didn't it? You can see it straight away. Went in, tried to develop, tried to test the point of control and this balance, and just rejected it and said no thank you. And earlier in the day we were out. So I'm not going to merge those guys. These two probably would merge it. See, bulk of it was inside. So I'm going to merge that. Okay, and then as you can see, the market's got a new perception of value. Okay, so clearly I'm going to cut that. Right. Go up. I'm going to merge these two. Again, very grey area, but I think it's decent. You can always see how it looks, like I said. If you're very unsure and you still logically think, well, because don't forget, I think I said this in task 1. Often, right, I won't be like really rules based around, oh, I have to use, because remember the maths is better, the statistics on the value areas. They're just statistical probability. Value areas, right? They're going to be more accurate when you use market data on a volume profile. Don't forget, market profile, it's basically using, as it's sampling variables, it's using dots or letters or whatever it is. And at the end of the day, those are like what, 3-tick periods. Don't forget, every time the market moves 3 ticks. So it's not going to be 100% accurate. So I don't mind visually thinking of value as maybe something like that, right? So can you see? For me, that's in pretty much inside. So I'm going to merge these. I tell you, I would merge them. Okay, it's not perfect, but make a decision, move on, and take responsibility for it, really, and let the market tell you. And actually, market feedback was that it agreed. Okay, it's not always going to be the case that the decision I make is the magical keys to the kingdom and this happens. It doesn't. It just so happened that the market agreed that time. There's going to be plenty of occasions where you decide to not merge them and the market agrees with you, because different investors, different days, right? This is the mistake I think a lot of people make, even when they're coming through institutions. Because I don't want to keep saying it's all retail, it's all retail. It's not. The failure rate in institutions, I keep saying, is very high as well. Because I noticed they get obsessed with thinking it's the same people trading every day. It isn't. Do the same people go into Tesco and buy bread every day? No, it's different people. Different people every day, different perceptions of value. So some days the market might agree with you, as long as you make a logical decision. I keep saying it. You'll be all right. You'll be all right. And believe me, you'll see you've got much bigger things to worry about. When I introduce about 5, 6, 7, 8, 9 different lenses to you, you're going to be like, do you know what? Whatever. I'll just take it and move on. You'll understand why I have this kind of, not blasé, but I'm not going to argue about, little value area being here or here. I don't care, because at the end of the day, it's not that I don't care. I recognize that there's other lenses and sort of views of value that I need to worry about. That it's all when I put it together. It's not only composite, as you'll see, that I'm looking at. Although this is all about expectations, helps me form expectations. So it's very, very important. Don't get me wrong, but it's not the only thing I'm looking at. So there we had a huge move. These two I wouldn't merge, but these three I would, and this is a good opportunity for you to split this out, right? Because you've got distribution here, so very much you can split it out. Again, I want to be honest with you, I don't do it. I would just merge these two, but that's, whatever. I've explained why I don't, but nothing wrong with it. And actually it's more accurate if you split them out. Do it for a few months until you make the decision whether it's something you want to do or not. So clearly that'll be cut. Okay. So can you see market open there? Bang, shorting opportunity. Guys, this stuff is, I don't want to say magic, but it is very, very powerful. All you're essentially doing is, it's almost like, ideally you'd want to send a survey out to millions of people and say, what's your perception of value today, right? That is the best and most accurate method of trading, right? In this alternate reality. This is the closest thing you're going to get to that. It's almost like you're doing a survey and asking people, where's your perception of value? And they're telling you. That's why this stuff is so powerful, right? So these two, obviously, you'd be merging them. Okay. Mark that. Then you've got. Then I would merge these days potentially. I mean, this was out, but this was in. I'm going to merge them anyway. Right, then I would adjust it, then I would merge all of these together. What it is I would merge that. I probably wouldn't merge that day until this new information came in. Then I would merge all of them. Hope that makes sense. I forgot to mark these. Take that off. And again, I'm sure you understand, I'm going to try and really speed it as much as possible, just because obviously we are lacking time. So this was a period where the market was very imbalanced. I don't need to merge any of this. I can key off all of these levels, right? Previous levels. This is where it just really comes into its own. I can open, what am I doing here? Look at this. This is from ages ago. Months ago we drew this. Look how powerful this stuff is. You're opening outside of value, you come in, you build. What did I say? You either go balance to imbalance by breaking and building value, the other side of value. So you break the value area, you go imbalanced, from imbalance to rotation, sorry, imbalance to balance, rotational environment, you build. Where's the target? Other side of value. These profile, this composite lines are from months ago. This is what I do, guys. I'm using this, okay? This will be my target. I'll take some profit here. Scale out, obviously, point of control, as I said. And then I'll target the other side of value. I know people who don't target, who don't even look at this point of control. They'll just say, nope, I'm going to the other side of value. Again, it comes back to equity curve. Mine's going to be smoother. Theirs might be more lumpy, and they might end up with more. Doesn't matter. There's no right or wrong. Hold it if you want, and then take a full stop. But then when you actually make it, you're going to make money on the whole amount. So it's going to even out. You may even be ahead of me. This is what everyone's different. You have to understand that. Everyone is different. Confidence in levels. There's many factors that come into play. Imbalance, imbalance, imbalance. Okay, I'd still be using all of these levels all the way down. This area, you can see it. And I will show you when we do the VWAP stuff that, look, the market has respected this area. So obviously here it comes into a rotational area. There were definitely shorting opportunities off here. In fact, I'll just open it up. Okay, do you see that? It's clear, isn't it? You can see the shorting opportunities. Okay, shorts, shorts into rotation. I did say I like to scale out here, that's why, but some people will target the other side, which is in theory what I would do with the rest of my position, but obviously everyone plays it differently. I've got my way of playing it. I'll show you the options and you can develop over time. So this, obviously, there's no merges all the way down. This and this, clearly you're going to merge. Right, and that's going to give you... New investors have come in, they've balanced and said, nah, do you know what? This doesn't work for us. Happens, right? Keep saying it, happens on eBay. A few months later, people will come in. The perception of value for items will change. Obviously, in the real, some items can be distorted because they have a shelf life and they become obsolete. That's different, right? Crude oil doesn't necessarily become obsolete, so it's always fresh perspectives of value. Something I haven't really talked about before, but it doesn't matter. At the end of the day, it's all the same principle. It's exactly the same. If we strip out that obsolete effect, it's exactly the same, isn't it? Perception of value over a few months is always going to, new people come in, they're going to perceive value within this area slightly differently, or they may perceive it the same. So you might be saying, well, if they're perceiving it differently, why am I using old value? Because until they do, what else is there? That's all there is, right? You're wasting your time looking at this indicator. That don't tell you anything. This tells you where the market's current perception of value is, which is still valid for months, for years, whatever, until I'm not obsessed and going to stick with the old value. If new people come in and tell me, as they've done here, no, this is new value, of course I'll get rid of it. But until this happens, I've got so much opportunity to take advantage until new value is built. Hope that's obvious to you. Guys, this is why every institution looks at this. Can you see? What else is there? Really, what else is there? I'm not saying there's not other ways to trade. Of course there is. There's algorithmic trading, but they're still using volume. They might be doing it in a slightly different way, but they're still using volume. And I can assure you they're still using the guidelines I gave you, the expectations. Obviously the entries, exits, how they're doing it, how much risk they put on is going to be wildly different. And that's why one guy doing this and another guy doing it can obviously still not make money, and the other guy can make money. Of course, it's going to vary by person. Lots of factors that come into it, VWAPs, and I've mentioned this. It's not only this, but the underlying principle in every single institution is the same. And it has to be, because at the end of the day, I've talked about this in auction market theory. If the market's telling you this is where we think fair value is, why would you ignore that and just say, no, well, actually, my indicator, 50%, this moving tells me something different? It's garbage. Listen to the market, right? That's all I'm saying. Apologies, I did go off on a little bit of a rant there, but just want to make sure everyone's getting it, that's all. So we've got balance here, imbalance, imbalance, but in fact there's some nice overlap there, isn't there? So I'm going to merge those two. Investors have come in and they've started, do you remember I said markets balance to imbalance? That's all it's done. It's gone imbalance, unbalanced, found fair value, right? It's what's happening all the time. Market is just constantly in a state of flux until it finds balance, then it will rest there. Market orders, buy and sell, will oppose each other and build volume until one side decides, or the market as a whole decides there's a fundamental shift or whatever, so they need to seek value elsewhere. And either they're going to seek that where previous value is, as I said, or they're going to establish new value. It's happening everywhere. Keep saying it. It's happening in chocolates, milk, eggs, kids' toys. Guys, anything you think of, this is the process. Auction process happening. Okay, so anyway, so we broke out here. We had imbalance opportunities. We came back in, rotation environment, plenty of opportunities there. I'm not obviously going to keep repeating the framework guidelines that I've given you, but you can see it's pretty clear. So potentially here, in fact, even though this has popped out, we've come back in, I would probably merge these days. Okay, and I would obviously adjust this. I'm not going to keep doing that, but then you adjust it, next day comes in. I want you to do it in a much slower manner that I'm doing it. Obviously, I'm covering the whole year on a video, so I'm going to try and be practical. Okay, got value here, you've got value here, and then this, I don't know, I probably would see how it played out. It's a tricky one, isn't it? Have a look at it. This is why I do this. I want you to see. You have to make a decision. Maybe you could argue that is within. So maybe you could argue that is within. So I'm gonna merge them actually. Again, you see there are going to be grey areas. Really not going to make a huge difference. I mean, it's adjusted the area slightly, but I like it. You see, it looks pretty good, but the upper side of value didn't really change much. Then we'd merge those two. Okay, balance to imbalance. These two, that's a bank holiday clearly because it was a very short period. So I'm not going to merge those. I'd probably merge this whole area here. Okay. I know it's not the perfect shape, but it's pretty good, right? It's just balanced in one area. Then we've come in. Guys, look at this. It's just amazing, isn't it? I mean, it's not amazing. It's logical. Obviously, the market, there's been a fundamental, maybe not fundamental shift, but a small shift in crude oil. It's only let's not exaggerate. It's 58 to 57, 58.50 to 57. But obviously, something may have happened, a small localized issue in the market. Well, I told you I don't look at fundamentals on a short-term basis. Clearly, something's changed and the market's looking for value to shift. Where's it gone? It's easy. That's why it's happening, because the market is going to test, can we hold this area? It's just an auction process. Okay, so you can see respected, respected. Really nice opportunities to be rotational on all these days. And then obviously these two. I'm probably, it's a tricky one. Let me see what it looks like. Yeah, I probably wouldn't merge them. Just because this is such a powerful merge, we've got so many days. I'm making a decision based on some thinking, logical. That doesn't mean if you said, you know what I mean? No, there is some value overlap here. The market didn't really go anywhere between these two prices. I'm going to merge them and get rid of this. It's not the wrong decision at the end of the day. Look, do you see? Actually, I just noticed, this is a great example of what I said earlier. Look, had you done that, new investors agreed with you. Do you remember I said earlier, it will even itself out? See, I wouldn't have merged this, and I might have had to take a little bit of drawdown, but it's fine. I'm okay with that. Make a decision, move on. See, don't become obsessive. This is the problem. I keep saying it with indicators. The indicator will try and look for a perfect way to do. There is no perfect. Don't exist. So stop chasing. It's a liberating feeling when you said, you know what? I use some logic and it seems to be okay. It used to get to the stage where it was like my boss would say, maybe you should. I don't care. You know what? You trade your P&L, I'll trade mine, and I'll live by it, because that's ultimately what happens. When I go home at the end of the day, or when I used to work in obviously in the institutional environment, I was the one that had to be responsible for that, right? At the end of the day, it's my bank account, it's my P&L. Yeah, obviously I was trading firm capital, don't get me wrong. I don't literally physically mean my bank account, although obviously now that I'm a private trader, it is my bank account. But when I was in an institution, obviously I would be trading firm capital. But I just mean a bank account belonged to kind of me in terms of the trading account was mine, right? And the profits that were being paid to me after I split it with the firm were mine. So it was my bank account. Ultimately, I was responsible for that, right? I couldn't turn around to my boss and say, well, you told me to do that. Don't work like that, guys. You know, just make the decision, move on. I know I keep saying it, but I just want to make sure that everyone just understands the power in doing it. So this was all imbalance, nothing to do. This day and this day, I wouldn't merge, but you can potentially split them out. Do you see that? I said, I used to do this for years, so don't think, you know, do it. Merge with next profile. Do you see? It's actually pretty good, isn't it? Works really nicely. Okay, and just in case anyone's getting confused, so I didn't mark the point of control there. I just want to make it absolutely clear, we only cut this profile when we get composite, multi-day, because this is much more powerful than a single day, okay? So I agree, this day did, but it's just one day. I'm not going to cut this. I just want to make that clear. I'm not going to cut it when there's just one day, okay? If another day had come in and we merged the two, yeah, I would cut it. Another day, days come in, whatever, it's not going to be perfect, but do you see what I mean? I want at least 2 days, okay, to cut it. I'm not going to cut one day over a multi-day. It doesn't make any sense. Day-to-day investors coming, going, but when they stick around for a couple days, 3 days, obviously that value build is going to be much stronger, and then I will cut only when I get second day. Okay, hope that's clear. Just thought I'd mention that because, like I said, it was a good opportunity to mention it. So this and this, obviously you're going to merge them, right? So again, same applies, sorry, because I jumped ahead there. Yeah, you see what I mean? It's a single day, I'm not going to get rid of this. And I wouldn't merge these two, right, because we rejected it. Do you see, we went in, rejected, and we'd had a fair few periods outside, clearly. not to me. It's the power of talking to each other in the Discord or whatever it is. Ask each other, what are you doing? You know, you're going to learn a lot by doing that process. Crude's had one of its erratic moments and decided to disappear from me. There it is. Obviously, this was the coronavirus period. Do you see? I'm not hiding behind and saying, no, these are perfect examples. I'm actually showing you in one of the most insane periods. So obviously the period we started off with was a very balanced period. And generally, oil does, believe it or not, tend to be like that 90% of the time. This was coronavirus, obviously a unique period in history. And I'm going to show you how I merge even in this period, okay? I embrace it. I take the decision. I make it. So clearly here, you're not going to do anything. Next day comes in, clearly you're going to merge. Okay. And I keep saying this, throw anything at me, I will use logic to merge it, okay? And the tougher it is sometimes, the more I think, maybe I might be able to spot an opportunity here that the rest of the street hasn't seen. That doesn't mean, don't forget, I'm making this decision before RTH opens. This hasn't actually happened when I've made this decision, right? I've got the areas here. Obviously, I mark the point of control. And the market, I'm not saying that the market won't do this as well, but the point is I'm just trying to spot it before the session opens. And then others come in and realize it, but after me. I don't have to be in front of everyone. Obviously, there'll be people overnight who may have spotted this. And I can assure you, institutional investors, look, they're smart guys. They're looking at this stuff, okay? They know value. Go and have a look. Go into any professional firm and talk to them about profile, value, VWAP, POC, VPOC. Guys, to them, they're going to talk to you like it's their first language. They're going to put their hand around you and say, this guy knows what he's talking about, okay? If you go in there and say, 50% fib, all of this, it's not going to cut it. Speak to them about this stuff, any institution in the world, and they're going to make time for you, and they're going to know, they're going to be able to have a discussion with you. They'll be able to sit down with you and talk to you about all these things. Okay, so your perception of value was here. This is where the point of control, according to your perception of value, it was here. What were you doing? Were you going for the other side of value? Oh, no, actually, I scaled out at the point of control. Guys, institutional language. I'm really happy for you. And I'm so happy to be able to share this with people outside of professional circle and bring you in so we can have conversations using professional language. So, have confidence in all of this. And know that not every person is going to see this the same way. I know I keep repeating it, but it is important. So clearly I'll be using this as, trading this as a rotation environment, merge with the next one, right? See the market respected it well. We obviously went in balance this day. We came back in, we tested the point of control. Then we went in balance. Great shorting opportunities, even in coronavirus. I obviously did say I didn't trade March because, it's beyond the scope of this. But if you can have a look at my IGTV, I did a coronavirus analysis where I showed the range of markets and how I plotted it on a normal distribution, and I showed we're at extremes. And obviously institutions' models are calibrated differently to trade in balance periods over time. I mentioned this in one of the previous videos. Do you remember I said, not necessarily when market is balance, imbalance, balance, imbalance, that's fine. But when I said we have long periods of imbalance, the depth disappears. Do you remember I mentioned that? And institutions, they switch their algos off. Don't forget the market's 85% algorithms. When the market's algorithms are switched off and depth is switched off on the supply column, what the market going to do is going to go crazy. And I said I don't want to trade it for that reason. So I identified that. However, I can still merge profiles and I can trade it if I want to, according to value. My point is I want to show you in different environments. So we basically cover every single angle that you're ever going to see and you can make decisions. Okay, so I hope you appreciate I'm actually doing this, even though I didn't obviously trade the coronavirus period, to show you that, look, make a decision if you want to. If you get volatile periods, it doesn't matter. You still got to make the decision. So here, like I said, there's nothing down here. You can use previous value, and then over here you can use the composite. I wouldn't merge these two. Let's move on. We're almost done now. I'm sure you're sick of hearing my voice, so the pain's almost over. So I wouldn't merge that. I wouldn't merge these two. Potentially, actually, there is. Actually, see, the thing is, I was thinking you could split this out, right? And you could merge these two. Okay, nice balance there, very nice. Okay, I would mark the point of control. I apologize if I forget, but do mark those point of controls. Okay, look at this, completely crazy. Do you see how actually powerful profile is? Because straight away you can see where's value. Market is not able to agree on value. You can see this straight away. You don't even need to look at a chart. See straight away, okay, market is not able to agree on any value. So let me stay out of the market. Why would you trade it? It's ridiculous. Okay, theory, you can merge these if you want. Merge this with this with this. But you see, the market is telling you the value area is so wide. Why is that? Because the market can't agree on value. Its perception of value is there, but it's very wide. Okay, and you can see that even here the market does have that perception of value being very wide, but actually in between I think there were some merges. So here obviously you wouldn't merge with that. I mean, you could, maybe you could actually. It's basically overlapping, isn't it? It's filling in this area. I apologize, I jumped the gun there a little bit, because obviously it just threw me a bit how wide that was. But yeah, of course you're going to merge that. I mean, it's not great, but guys, you're not going to trade this, are you? Look how wide this thing is. It's just ridiculous, right? I'm talking like 5 handles, 6 handles. By all means, put them on and look at them, but I just wouldn't trade this environment. I'll go to the E-mini. Got to be able to recognize these conditions as they appear. Do you see what the market's doing here? It's just filling this in. Look. Do you see? The market's completing the auction process. Okay? It's testing. That's what it's doing. Don't care about, I keep saying it, don't care about an indicator. It's testing. It's an auction. It's doing what eBay does, what Amazon does every day. They don't look at indicators, do they? They look at where are people willing to buy and sell? Market orders, guys. These are all market orders. Now you see what I had you on that thing. I wanted you to understand the auction process. It's going on in the depth of market. It's going on across multiple days. It's just a bigger lens. That's all it is. Okay. Imbalanced, and these three, we're obviously going to merge them. Sorry, I'm going to rush ahead. Obviously, you would draw that in. And look at that. Amazing trading opportunities. When you're in balance, you stay balanced, you target the other side. Okay, so we merge that. Guys, I'm going to be seeing merges in my sleep tonight. I mean, literally, I've done that many, but I really hope you can see I've done this to help you. You know, I want this to be the best education in the world. And, you know, that's why I do this. Why would I, you know, I don't want to just show you one perfect example. This example, let me just skip forward and go. No, I've literally covered the entire year, guys. I don't mean this in an arrogant way. I hope you see you're not going to get this anywhere else. You're just not. You're not going to get someone doing this, making tough decisions. I want to show you that I have to make the decision so you can do them with confidence yourself. So there we're going to merge those two. Right, sorry, I did skip ahead, but clearly we're not going to merge any of this stuff. Right, it's gone imbalanced. I'm not going to merge it. Merge those two. You can see it got well respected. I'm not going to merge these two. Completely crazy market place. theory, you could argue you're going to merge them, but you're not going to be trading it, are you? Let's be honest. Do you see what happened? Even in this environment, it has to be, right? The whole price mechanism process is what? An auction. So this has to be happening even in the most crazy environments. What's it doing? Just filling it in, guys. Just filling it in. Okay? 80% of the market's algorithms, now I'm showing you what algorithms are doing. They're reading volume. They know that there's a cavity here. Let's go and test it. Let's go and see if the market is happy to continue to hold value here. If not, we'll go elsewhere. Simple. Okay. So in theory, you can draw some value in here. Literally almost done now. I think it's just 2-3 weeks left. Obviously, you're going to cut this. You're going to cut this. And I did say I do mark these, right? I know I haven't been always doing it. Obviously, the interest of time. Okay. Clearly not going to merge that. It's just a day on its own. Imbalanced, imbalanced, imbalanced. Maybe potentially those two. Yeah, those are pretty good. Okay, so I'll merge that. Okay. And this is where we had this historic run, didn't we? Down to almost zero in crude. But it doesn't matter. Still merge them. Okay, so we went down, went down, went down. Okay, I don't even know what to say to you about that. You look, we moved almost $10 in a day. So I'm not going to merge them. You can, but I'm not going to. Okay. Then we obviously gapped up. I won't even be trading this. Let's be honest. You'd be completely crazy, but you can still merge them, is my point. I want to show you in all environments. I keep saying it, but I really want to show you in all environments that, because what this does is it's good to merge and at least mark them. I'll keep them marked because it will help you as the market progresses to see, has the market calmed down? Has the condition got to such a stage where maybe I can potentially look at a trade? So there, obviously we had balance, we broke out, we had an imbalanced day here, which you potentially could have traded on the short side, but obviously in my mind I'd be thinking, look, the market's incredibly volatile right now. I didn't trade this period, as you know. I was very busy trading, well, putting this course together, but also I was trading FX, and also the E-mini had calmed down during this month as well, so it gave some great opportunity. So whilst I was doing the merges, because you can see, you can still do it, works. Market's still doing an auction process. I don't care if oil goes down to zero. Someone's perception of oil was zero. It's an auction. Perfectly valid. And you can see it. Look, nice, really nice value got built at $12 in crude, guys. You know, this stuff is incredible. Then we came up, look, trading opportunities there, off obviously the edge of old balance. Came up. Went imbalance, built value. Yeah, we spiked down, but then came back up. And here we are today. Alright guys, I hope that was helpful. I've basically almost covered an entire year for you. I apologise if I made any glaring mistakes, but look, at the end of the day, what was that? About 200 profiles or however many it was. Hope it's given you a really good idea of differences, and yeah, if you've got any questions, let me know, but hopefully that's pretty much given you a Bible of pretty much every scenario that has been thrown at me there. Go with it, have confidence. One thing you'll have to, I haven't mentioned it, and I might do a separate video on it, I haven't decided yet, is when a rollover period comes, you will have to adjust all of these balances going back when the new rollover period comes. It's because of the way that rollover adjustments have to be made for different periods to be joined up. Because don't forget, in theory, these are all different contracts, aren't they? It's like every month, obviously, in oil, especially having new contracts, right? So those contracts have been sewn together using this rollover process, which you can read about on the internet. Otherwise, it would take me hours to explain the whole thing to you. But essentially, it does cause the mobile profiles to go a little bit. They're very similar, you just need to adjust them. I'll talk about it maybe in a separate video, but just so I don't throw you off, if you come in, obviously when this rolls over, it's going to be the next month's contract, right? So there's an adjustment process to make them equalize. So it just means the profiles will get... You won't need to remerge them, but for example, it might just have moved down like that. So you just need to come in and just adjust it back. You'll notice this when it happens. So, but anyway, have a good day. Hope that was useful. And yeah, I'm going to now move on. Cheers.